All right. Hello, everybody. Welcome back to another market close. We are here today, and it's a big one. Apple is reporting earnings. I'm more of a potassium guy myself. I mean, I'm very appealing like a banana, but today we've got to discuss Apple. And so Apple's going to be the main focus of conversation today. On top of Apple, we've got Coinbase, we've got Square, we've got Draftkings. We probably have another couple companies I'm forgetting about, but there's a lot of companies today that, Mercado Libre, so Latin America, that's going to be a big topic today. Monster Energy, Cloudflare, there's a ton of companies reporting, and so it's going to be very interesting to see how this all plays out. But before we get into Apple earnings, which I think come out at like 4:05, I don't know if they come out exactly at 4 p.m., but we'll get some of the other companies as soon as they report. Let's look at what happened in the market. Let's look at what happened in the market today. We're getting into the market close. It's been a relatively good day for the equity market. S&P 500 up basically 1% on the day, and I think the reason it's up right now is Jay Powell's comments as of yesterday have officially been taken into effect. The market does believe that we are probably going to get rate cuts eventually, and even if the next one is not going to be a cut, it's definitely not going to be a hike, which is going to be a good thing. So markets are basically recovering on that right now. Shelter disinflation is becoming more of a thing as people are starting to realize that rents are coming down and inventory of housing is going up. Jay Powell explicitly said yesterday at the FOMC meeting that they are waiting. He basically said, yeah, our data is lagging and we're waiting for the data to catch up, and that if disinflation and shelter is real, then we're going to see some more momentum to the downside, which is going to be very good for equity. So right now, what we're looking at, we've got S&P at 504.28, up 0.8%. Disney's up 2% on the day. Hims, CEO said some political stuff. I think that's why it's down right now, down 2.36%. Sirius XM up about 0.16. Bitcoin as well, actually having a decent day. It was having a crappy day in the morning. Right here, 700 points away from getting back to 60,000 as a result of that. Robinhood up 5.23%. MicroStrategy, they're having some investor conference day as well, so they're doing a ton of media today in terms of how they're going to become one of the world's best Bitcoin development companies. They're up 10% on the day. CleanSpark up 1.63%. Coinbase up 9% right now. I do think Coinbase is going to have a good earnings. This is one of the earnings I actually think is very logically going to be good, but I could be wrong. So the way I think Coinbase is going to play out, let's talk about them and then we'll get into Apple. The reason I think Coinbase is going to do amazing is because if you look at their earnings from the last quarter, they printed a crap ton of money, and they printed a crap ton of money only when Bitcoin went from like 15-ish thousand or 20,000 to about 40,000. The move wasn't insane. In January to March, which was the last 90 days of Q1, Bitcoin went from 42,000 to 73,000. Coinbase takes a percentage of fees on top of every buy, sell, and transfer of Bitcoin. Not only Bitcoin, Ethereum, and Solana, those are the other two big ones, and then a bunch of meme coins. But Bitcoin's the big one, as a percentage of the price of the asset itself, not just the flat fee. Robinhood does it a flat fee, which is why it's cheaper. Coinbase, one could argue, a bit more secure in terms of how people enjoy trading crypto. That takes a percentage fee. As a result, I think they're going to print a ridiculous amount of net income. I just think their net income is going to be fabulous. It's going to be extravagant. They're going to print, I don't know what the estimates are, but it wouldn't surprise me if they get close to $1 billion of just pure net income. I mean, it's going to be pretty insane. I think last quarter they had something close to that level. Their revenue is expected to be up 73% year to date. The earnings estimates on EPS are 51 cents a share. So that would beat by 5,000% because last time this year, 98 cents a share. That's the estimate. So 98 cents a share is the estimate, which would still be up like thousands of percent because they weren't profitable last time. And then revenue of 1.25 billion. So they're probably going to pull in 500 million of net income, not a billion. I meant to say revenue, not net income, but half of that could theoretically be net income, which wouldn't be that bad. 98 cents a share. I mean, that would be incredible to see what Coinbase could pull up. Even if it's 250 million in net income, I think that would be pretty exciting as well. So I think Coinbase is going to do good. Now, the reason Coinbase might do bad, one of the reasons why Coinbase might not do the best, is because of Bitcoin, right? So if Bitcoin went from 41 to 73,000, Coinbase took a fee off that, which is good. But honestly, the market doesn't care. I mean, if Bitcoin falls or if Bitcoin goes to 57,000 and Coinbase produces $1 trillion of net income, the market will sell off Coinbase because it's pegged to Bitcoin. The Bitcoin ETFs actually had zero impact on Coinbase in general in terms of trading volumes. That was one of the bear cases around the Bitcoin ETFs. That would be good for individual equity investors, but not good for crypto investors. That was not the case. It just created more excitement around Bitcoin. And although the ETFs have amassed about $40 billion of inflows, that has made crypto more exciting, which is why people have traded Bitcoin. The other reason I think Coinbase is going to do good, and I did a little bit of a earnings play on it right here that I'll explain in a second, is because Larry Fink should be paying them hundreds of millions of dollars. BlackRock, Fidelity, ARK, Cathie Wood. Coinbase is the institutional custodian for all the larger crypto ETFs that wanted to get access to Bitcoin. So if Larry Fink wants to buy Bitcoin, he can't just do it, on his own Coinbase account. He has billions of dollars of client assets. He has to go through an institutional custodian that is Coinbase, that is secure, confidential, protected. It keeps everything in one place. So you can, like in Bitcoin, we've seen horror stories of Bitcoin, getting lost, things like that. Coinbase provides that as a service. So I think that also is going to help them beat on their revenue estimates. And it's going to be pretty exciting. So what's the earnings play I did for them? I spent $125 May 17th. I did a call debit spread. I bought the 250 call. I sold the 255 call. Which means I made a spread between 250 and 255. So the width of the spread is $5, 255 minus 250. I paid 125. So the max I can make on a call debit spread, my gains are capped at $375 or $3.75. 1.25 plus 375 equals 5, which is 375 times 100 shares for one contract. That would be $375, which means this contract could theoretically go up 300%. My 125 turns into 375 of profit if Coinbase is above 255 or at 255 by May 17th. Now, my goal, because that's a 14% move, which I think it's possible on good numbers, but I could be wrong because maybe some of this news is baked in. It's already up 10% on the day. Maybe that 10% run is already baked into the price as well. If that's correct, then I only want to get 50% of the contract. I'm not looking for the full 300% gain. So if I can even make 40 or 50% on this 125, it's not a lot of money, right? It's like, $50 or something. It's not crazy, but it would be a nice little win to secure on some momentum in Coinbase. Now, if Coinbase just blows the waters and it goes to 270, 280, then I should be able to capture a decent amount of the gain even tomorrow if I choose to sell it based on how this plays out. So that is the earnings play I have on Coinbase. And again, the reason I'm doing this is because I just think they're going to print a lot of net income, and the institutional inflows from the custodian product is going to be pretty damn good for Coinbase. The only problem with Coinbase is that it's run up dramatically. So if we look at Coinbase's chart, and then we'll talk about Apple in a second, Coinbase right here was at $30 around this time, 2023, right? So it was at $31, literally February 2023. So right around this, then it got to like $50 by May, and now it's at 230. So it's up 7x. Up 10% right now on the day. One could argue this move is the reason why Robinhood's moving up 5% on the day, because Robinhood is still a brokerage, which is attached to Coinbase from the crypto perspective. Or one could argue this 10% move is traders betting on Coinbase, and then it's going to dump after because the gains have been secured with this 10% move. I mean, 10% is 10%, right? So one could argue how much juice is left in the stock, and I think the numbers would have to justify it. Last time we had earnings on Coinbase, they tanked after going up. So they went up like 20% and then they tanked. Which was kind of annoying. I think it's right around, last earnings was December, right? So right around, let's go to the year to date. So it was at 114 in the beginning of the year, or actually at February 7th. Let's actually go to the max, and we'll show you this. So what we're looking at right here is 227 on the day. And then right here, bottomed here at 192 just a few days ago. Now, this 192 price is very interesting because this 192 price was the exact same price Coinbase was at right before they had their last earnings back in December. We went all the way up. All right, so we were at 168. We went all the way up to like 198, and then we tanked right back down to 194. Alibaba also having a good day. We'll talk about that as well. So from that perspective, when it comes to Coinbase, it's just a little scary because it is known to pump and dump off of earnings pretty much every single time. And if it can't continue to maintain that momentum, then I think it's going to be hard to see where Coinbase actually ends up. So this is the earnings. This is where the earnings were back then. So we were at, right around here in December. So as you can see right here in December, we piled up all the way to 187, and then we dumped right here to 119. But we came from about 70, and then this was the earnings right here. It was at 148. Literally 148, 187, amazing move, and then it came right back down. If Bitcoin falls, Coinbase will fall, and so I'm betting that Bitcoin maybe has already fallen enough, and that the Coinbase numbers will be pretty good to go. Apple, let's talk about Apple, 172. Let's talk about Apple. Why is Coinbase pumping right now? Well, I think the primary reason is people are excited about earnings. Why is BABA pumping? Honestly, I haven't had enough time in the day to learn why BABA is pumping, but I think there has to do something with the Chinese regulations and them kind of letting loose free market capitalism, which is why Alibaba is pumping up today, but we'll talk more about them after the bell. They are up 6% on the day. Okay, Apple, 2%. What do I expect from Apple? Let me put the poll in the chat as well. Michael Wilder, what's up? Thank you for being here in the chat. Let's put a poll. Does Apple dump or pump on earnings? I think, quite frankly, I think it is very possible that Apple can pump, even though I'm bearish Apple. Why am I bearish Apple? Because the Vision Pro is not exciting to me. Apple iPhone sales are down. They're getting sued by like 17 different regulators. And the Mac and the iPads are just not that exciting, right? So why do I still think Apple can go up? Well, if you look at the yearly on Apple or the year to date, Apple was at 195 January 1st, and now it's at 172. So it's taken a beating. It's taken a nice little 9% haircut. It is what it is. And I think at some level, if Apple continues to not show really strong numbers, then what is the reason for why the street should get excited? What are we expecting from Apple? We are expecting $90 billion in revenue, $1.50 on EPS. Now, 90 billion would be down 5% year over year. In the last quarter, they put up about $117 billion. That was expected. 119 billion they reported. So they grew 2% year over year. Now they're expecting to do 90 billion. That's okay because the next quarter after the previous quarter always tends to be a down quarter, but that's still down 5% year over year. When you're a company like Apple, you've got to do something to keep shareholders engaged if they feel your products are getting stagnant. I also think Apple needs to say something about AI. And if Apple doesn't say something about AI, that's also going to be pretty bad. Apple's probably going to have done, we're going to find out, probably what they do, about $30 billion of buybacks in the quarter. They do about $7 billion every single month, or $8 billion every single month. So if that's the case, yeah, the buybacks will be fine. But the EPS, to get that to be higher, I'm not sure what they can do. I also think I also think that the dividend being increased is potentially possible. We saw Amazon and Google issue out a dividend. Maybe Apple's just like, you know what? We're kind of behind on generative AI. We really need some time to figure this thing out. We just got rid of our EV project. The Vision Pro is not really working. Here's some more money and just stay with the company. People want to stay with the company. People want to own Apple. Owning Apple is almost like owning the market to an extent, even though the market's gone up and Apple's gone down this year. So I think introducing an increase of the dividend wouldn't be that crazy. Now, I'm also curious, what the heck is Tim Apple going to say about artificial intelligence? And I fear, genuinely I fear, on the earnings call, he's going to say, hey, Siri, tell everyone about our new AI plans. And then Siri is going to be like searching the web for new Apple AI plans. If that happens, Apple is going to go to $30 if that happens. And if that does happen, the entire market will crash with it. So we need Apple to do good. Now, I know there's a lot of people who are Apple haters and they just don't like Apple and they're fine that the market's going up even though Apple's going down. I can sympathize with that perspective. I'm not an Apple shareholder, but we don't want to see Apple do bad as just like people that are trying to make sure the stock market does not collapse. Because if Apple goes down, then the market's not necessarily going to love that. So I'm a fan of big tech doing well. So far, every big tech has done well. We got 20 seconds till the market closes, and I think Apple hopefully continues to do well. And then Nvidia does well on May 22nd. We're going to be good. We should be good. $30 was a joke, guys. It was a joke. It's not going to $30 if Siri does that. But if Siri does that, that would be insane. If he asks Siri to explain Apple's AI strategy and they don't talk, that would be pretty insane. All right, here we go. It is 4 p.m. Thursday, May 2nd. Very big day in the global capital equity markets. Thank you, everybody, for being with me here. May 2nd, stock market is now closed. All right, let's make our list. Let's make our list. So today is 5/2. We've got a list to make. Let's see what we got going on. We have Apple earnings. We have Coinbase. We have Square. We have Draftkings. We didn't even get to talk about Draftkings. I think, where is Draftkings right now? Are they at 50 yet? Draftkings is at 43. Yeah, I think a run to 50 is not insane, but we'll see what happens. What else do we have? Draftkings. What else? Today we have something else. Cloudflare, Monster Energy Drink. Yeah, so Mercado Libre, Net, Cloudflare, and then Monster Energy. And those are the big ones. If I'm not forgetting anything else. Yep, those are the big ones. Oh, and then Opendoor. Opendoor as well. Zillow didn't have the best earnings, so we'll see how Opendoor performs. All right, here we go. Now we stare at the screen and we try to figure out what happens after hours. This is the moment where all of us kind of question our sanity as we stare at these numbers go up and down, and we'll see. Oh, Fortinet as well. Okay, Fortinet. That's a cybersecurity one. That's a good one. Fortinet. That'll be a preview to CrowdStrike and Palo Alto, right? Yeah, that's a good one. Apple slightly up. Again, I think Apple might take a couple minutes before they report. Cloudflare is already down 2%. So let's see. Let me pull up a bunch of different estimates I have, and let's see what we get from there. We're probably not going to get a move for like a couple of minutes. It's going to take a second, and then we'll see how this plays out. Oh, what's the results of the poll? Oh, wow. 56% dump, 44% pump. So most people are saying Apple's going to suck. Okay. Apple is still green. It is still green. Let's put it on extended hours. Okay, so this is extended hours. So now you should be able to see the chart. Everything is relatively flat. It's the calm before anything happens. Oh my God, open door is down 6%. There you go. Red candle on open door. Red candle on open door. Open door is red. The door is closed on open door. And open door, I mean, if you own open door in the chat, I'm sorry, but it's just not that good of a company. It's one of those SPAC companies that just, I don't know. Now, maybe it balloons higher, goes up 20% or something, but right now down 5%. Never really believed in the business too much. Right now, flat. It's teetering between flat and down 5%. We'll see what happens with Open Door. Also, the president of Open Door left and the founder, so that's also a little bit of a red flag. CEO was dumping a ton of shares. Oh, Apple earnings is 4:30. Okay, so we have some time before Apple. Okay, so Coinbase should be out relatively soon then. We should get Coinbase soon. Open Door is down 4%. No other big moves. Draftkings is down 1%. So Draftkings bought an app called Jackrabbit, which is an online gambling app, for $750 million last quarter, and that's why they tanked. So I think without that acquisition, maybe they're in a better situation, but we'll see. We'll see how that plays out. DraftKings is today. And then we'll listen to the Apple call. I think the Apple call is at 5:30. So, or maybe at 5. We'll see. Apple's now red after hours. Coinbase is flat. So the numbers still aren't out yet. No one has the numbers yet. Mercado's flat. Cloudflare is flat. Open Door is the only one that it seems like we got the numbers since that one's down. Jack Pocket. Oh, sorry. I said Jackrabbit. Why did I say Jackrabbit? What was I thinking about to say Jackrabbit? Jack Pocket. Sorry. Jack Pocket. Yo, I found out today you can do political gambling. You can bet on Biden or Trump winning. There's like marketplaces online where you can literally bet on presidents winning or losing. I didn't know that was a thing. Apparently that's a thing. So the gambling ecosystem is live and well. Okay, Coinbase is up. Green candle, 2%, 2%. Where is it going? 3%, 3%, 4% on Coinbase, 4%, 4.85. Let's see if it lasts. So far this earnings cycle, a lot of times this has happened. Then 6% on Coinbase. Let's see. Can it last? Can it keep going, or is this a pump and dump? Now it's the street's struggling with these numbers. It's like they like the numbers, but they're trying to see if they're going to keep buying. 4%, 4.8. Oh, Robinhood's probably. Oh, let me add Robinhood to this just because Robinhood works with Coinbase. Robinhood should be up after. Yeah, Robinhood 763. It closed after hours strong. Now Coinbase is back down. Wow. I think the numbers are going to be good. This literally happened last time. It went from 148 to 160, then came right back down. Now Coinbase is dumping. Now we got to dump on Coinbase. Dude, this is actually so funny. It went green then red so quickly. Okay, now Coinbase is down 4%. If the earnings seasons holds up, then Coinbase will stay red because the second reaction ends up being the correct reaction every time after earnings. Now it's green. No, now it's red. Now it's green. Wow. Now it's up to now it's red. This is so interesting. If you guys watched the earnings I did last time on Coinbase, it's almost exactly the same thing that happened. Almost exactly. It was teetering between up and down. It finally ended pretty green on the day, like 20%. But then it dumped, a couple days later. Down 2.4. All right, let me try to get the numbers. Let me see if CNBC has the numbers. Do they have the numbers? They don't have the numbers either. So let's check Twitter. Let me know if anyone owns any of these stocks. Apple, Coinbase, Cloudflare, Fortinet, DraftKings, Square. Square is a big one for Bitcoin as well. Oh my God. Coinbase numbers are out. Holy crap. These are good numbers. I don't know what the street is thinking about. These are fantastic numbers, guys. First quarter revenue, 1.64 billion versus 1.32. That's a big beat. They see second quarter subscription and services revenue to 525 million. First quarter EPS, they beat by 300%. Holy shit, dude. Oh my God. The street expected for Coinbase, 98 cents, basically $1 a share. They did 440. That's really good. The stock, I mean, I know it's up 10% on the day, but the stock should be inching higher. That makes no sense for the stock to be super red. I think this initial reaction might change. This happened last time. It was down like 10%, and then finally it went back higher. It's dumping right now, but those are not bad numbers. I'll check guidance, but I don't think guidance is bad. I don't think guidance would be that bad, given crypto is still doing okay, right? Bitcoin hasn't tanked so badly that guidance should be bad. This is a big beat, dude. This is a hell of a beat. Same thing with Meta. Yeah. But again, Meta had a good beat. Well, they had a slight beat. They didn't have a Coinbase type of beat, but they had more CapEx expenses, and that's what kind of hurt them. But it was a silly dip. Nothing else was moving after hours. Oh, Mercado's up 4%. So we got a nice green candle there. Open Doors now up 4%. It was down 6%. Fortinet's down 5%. Fortinet's down 5%. Coinbase is now green. Dude, those numbers are huge. Those numbers are absolutely huge. Okay, so we got some Coinbase coverage. Let me pull this up. We got some Coinbase coverage. These are good numbers, dude. These are not bad. All right, let's listen in. Here, what we got? We got Coinbase. Here we go.
Expected. So margins of around 60%. Street was looking for 47% margins. Transaction revenue was above $1 billion. That was stronger than expected. Consumer transactions really made up the bulk of that. 935 million. Institutional, a much smaller slice at 85 million. Still calculating the take rate, which is something analysts watch closely. Coinbase does expect transactions to grow, transaction expenses to grow, which tend to track volumes, and then sales and marketing expenses are also going to rise slightly this year. The stock, though, as you said, John, bouncing around down more than 4% after hours here. Back over to you.
All right. And Kate, Coinbase does not give traditional guidance, right? So I imagine that there's a lot riding on management commentary here on Overtime and then on the call.
Yeah, they do. They don't give traditional guidance. They give sort of this tiered approach, but we do expect an update for April trading, and kind of that tends to give you a directional sense of where things are going. Prices have come down, which tends to indicate that, retail trading is going to be less.
We'll go back to that. I'm sorry for the video, guys. It'll get better in just a second. Give it like 1 minute. The video should be fine. Let's look again at some of these equities. Coinbase is down 2%. Robinhood's down with Coinbase a little bit. Draftkings is down about 1%. Mercado's up 8%. All right. So Mercado had a good run. Mercado having a good run. Not bad at all. Let's try to pull up their numbers as well. See what we have on Mercado Libre. Coinbase, again, I don't think we're going to get the full reaction for a minute. It happened just like last time. It took a second for the earnings to continue to be there. Let's pull up Mercado Libre and see what we've got. Going on. Okay, so on Mercado, we got earnings. Okay, so Q1 earnings for Mercado Libre. As you can see, it's still green right now, right? Yep, it's up 8% on the day. Coinbase still red. Apple's up just a little bit. Cloudflare is down a little bit. Monster's up. Open Doors up. And then Mercado's up 8%. So Q1 6.78 billion versus 6.64. EPS 6.78 EPS versus 6.64. So a beat on the EPS. And then revenue 4.33 billion versus 3.94. Gross merchandising volume 11.4 billion. That's how many goods and services actually go through. That's up 20% year over year. And then total payment volume 40.7 billion, up 35% year over year. Wow. Mercado Libre, total payment volume up 35%, GMV up 20%, revenue beat and EPS beat. That's why we got Mercado Libre starting to show a little bit of momentum right here at 7%. Coinbase still down about 1%. That green candle is trying to fight. And then Apple right here is getting up a little bit higher. And Apple's moving a little bit, but the coverage is not out yet. For Apple. It should be out in about 20 minutes. Mercado Libre crushed. Let me know in the chat if you own Mercado Libre. Absolutely crushed. Not bad at all for Mercado Libre. And honestly, they deserve it. They got punished at the last earnings after not doing that well. So they deserve this one. Coinbase now down 2.5%. Again, the Coinbase thing is stupid. I don't think that makes a lot of sense. Let me see if I can pull up their pitch deck if that's live. Coinbase. Let's see. They did not put it out yet. Presentations, they did not put it out yet. Not yet. Okay, so we're still waiting for them to put out the actual thing. Probably is going to come out in like 5 minutes. Melly's up. Open Doors up 3%. Wow, Fortinet's down 8%. Let me try to get Fortinet numbers. Okay, Fortinet. Fortinet's a cybersecurity play. Let's see. FTNT on Fortinet. Fortinet numbers, total revenue 1.35 billion, up 7% year over year. Service revenue 944 million, up 24% year over year. GAAP operating margin of 23.7%. Non-GAAP operating margin of 28.5%. Cash flow 830 million for Fortinet. Draftkings not out yet. We are diligently executing on our strategy announced 6 months ago to leverage our scale, go-to-market capabilities, customer-first focus, and engineering expertise to capitalize on the fast-growing unified SaaS markets. We believe the offering is the most comprehensive in the industry and are well-positioned to lead on our 3 growth areas. Coinbase now down 4%, Fortinet down 7%. So they beat on what they needed to beat, it seems like. Guidance maybe not the best. That's why they're a little tough. Coinbase had $1 billion in adjusted EBITDA. Wow. Hold on. I was right. I was right about Coinbase. Coinbase, $1.2 billion in net income. Holy crap. Guys, they did $1 billion in net income. I said maybe they'll do 500. Well, I said $1 billion. Then I was like, oh, that's too much. They're probably going to do 500 million. $1.2 billion in net income. That's insane. DraftKings is still flat. Let me try to get DraftKings numbers. Wow, dude, that's crazy. They did 1.6 billion in revenue, 1.2 billion in net income. That is insanity, dude. That's like that's a ridiculous net income margin they have. DraftKings, let's see. Do they have numbers? Do we have numbers on DraftKings? DKNG. DraftKings is not out. DraftKings is not out. Not yet. No DraftKings. And then Square. Let's see if we have any Square. Square, I don't think is out either. Open Door red to green. Yeah, Open Door red to green. Square is not out. Okay, so we're still waiting for Square and DraftKings, but Coinbase, wow, 1.2 billion in net income, dude. Insane. Let's go back to CNBC and get some coverage from them.
Markets, they tend to see a lot of volume. So we'll see if there's any update on the current quarter, current months, and that should give a bit more directional guidance. But again, as you said, they don't give what the street typically would think of as traditional guidance. But a lot to talk to with Alicia Haas coming up with you guys.
Indeed. Thank you. As you mentioned, the Chief Financial Officer, Alicia Haas, is going to break down those results here on Overtime before she dials into the call.
From the rebound, that 39 cents adjusted on EPS, revenue coming in at $4.42 billion. So a company that's clearly benefiting from the rebound that we are seeing in outbound travel. So the
All right, so that was booking. We're still looking. Square's moving. Okay, let's get to Square. Square's moving. Square's up 3%. All right, getting some momentum on Square. Coinbase still down 2.5%. Guidance must have been something bad for it to be down right now. It's going to be interesting to see how that plays out. 3.5% on Square. Apple's not out yet. Apple's at 4:30. Apple's at 4:30. Square's moving. So we should get Square numbers in a second. If Square is moving, we should get Square numbers in a second. Let me see. Square should be out relatively soon. Square. Oh, wow. Square, breaking news. Implemented a Bitcoin dollar cost average buy program. Okay, does that mean they're buying Bitcoin, or does that mean they're going to give people the ability to buy Bitcoin on their platform? Well, they've already have that. Bitcoin dollar cost average buy program. What does that mean? If they buy Bitcoin and we see another company outside of MicroStrategy buying Bitcoin, that's pretty interesting. Okay, so Square EPS 74 cents. I think that's a beat. Is that a beat? I'm pretty sure that's a beat. And then sales 5.97 billion beat 5.82 billion. So they beat on revenue and they beat on EPS. Square had a double beat. Square had a double beat. AMGN, you guys keep saying AMGN. Do they have earnings today? AMGN, Amgen, they are down 2.25%. Do they have earnings today, June? Does AMGN have earnings as well? We'll check on them in a second. DraftKings still not out yet. DraftKings, well, it's up 1%, so maybe it's out. I don't have the numbers yet. Coinbase still down 4%. Apple's relatively flat. And then Square's moving up. The Bitcoin thing, if they're letting users dollar cost average into Bitcoin, then I don't think that matters. But if they're buying Bitcoin, that's different. Hold on. I think they're buying Bitcoin. Hold on. Oh, yeah. Here we go. Square is buying Bitcoin. Square is buying Bitcoin, guys. Square is buying Bitcoin. In April, Square implemented a Bitcoin DCA purchase program that will run through 2024. Under the program, Block will be investing 10% of its gross profit from Bitcoin products into Bitcoin purchases. Wow. Square is buying Bitcoin. I didn't know that. Cloudflare, oh my God, it's down 15%. Holy shit. Why is Cloudflare down 15%? Cloudflare down 15%. This was news 3 days ago. Okay, I don't know why it's coming out today. It's going across the terminal right now. Oh boy. Cloud is down 14. What did Cloud? Hold on, let's look at Cloud numbers. What the heck did these guys say? What did these guys say? Cloud, let's pull up Cloud numbers. Oh my gosh, that's not good for the SaaS space, dude. That's actually not the best thing to see for like Palantir, Datadog, all those companies, Snowflake. Okay, Cloudflare, first quarter revenue, $378 million. That's up 30% year over year. They're growing 30% year over year and they're down 14%. That's interesting. Are they not profitable? Is that the issue? Yeah, they're not profitable. They lost $54 million. The first quarter marked a strong start to the year as we grew revenue 30% year over year, fueled by a record number of new customers. They have new customers spending $500,000. We also delivered double-digit year-over-year improvement in sales productivity. Why are they down? Why are they down 17%? What the heck's going on? GAAP loss was $35 million compared to 30. That's why. They're barely increasing their profitability. So last time this year, they lost $38 million. Right now, they lost $35 million. So when you only lose $3 million less in a year, it means something's wrong with either your operating income margins or something's structurally wrong with the business. I mean, it's been a year. They should be significantly improving that EPS. Yeah, that makes sense why that's down 14%. That makes sense. Coinbase still down 3%. Trying to figure out why that's down. If Coinbase doesn't give guidance, it can't be on guidance. It has to be on Bitcoin. Where's Bitcoin? Is Bitcoin moving? Bitcoin's basically flat. Nothing too crazy. Coinbase is down 3%. Very weird. Okay, Draftkings. Let's go to Draftkings. Do we have those numbers yet? DKNG. Draftkings growth has been phenomenal. Yep, here we go. Okay, EPS. Oh, these guys should be doing well. EPS, they just beat on EPS dramatically. Hold on. Draftkings EPS of 3 cents. Oh, they're profitable. Holy crap, they're profitable. They should be up. Yeah, wow. They're up 2%. They should be up like, I would imagine, a little bit more. They're profitable. Draftkings is profitable. The street was expecting them to lose 20 cents a share. They're bringing in 3 cents. Revenue $1.18 billion. They beat expectations of $1.12 billion. That's great. That's incredible. That's amazing. Draftkings has never been profitable before, to my understanding. That's incredible. I think that street's gonna like that. That should be a decent reaction we see either today or tomorrow. Monster is up 1%. Monster is actually really interesting. I want to look at that one because Celsius is getting all the love, in the energy drink cycle. And I think the drink is disgusting, but I understand they're growing a lot more. Square's up 10%. Oh, Square's moving. Square is moving. Wow, Square's up 10%. There you go. Square is moving. Square is moving. There we go. Okay, on Monster, record net first quarter sales of $1.9 billion. They're up 11%. Net sales, $64.4 million. Gross profit, 54% as a percentage of net sales. That's a record quarter for Monster. $1.9 billion. I think they beat on the estimate. The estimates for Monster were no, they came in line. $1.9 billion. That was the estimates. So Monster seems to have done okay. Square's up 11.2%. Fortinet's down 8%. Coinbase is recovering a little bit, down 2%. Cloudflare recovering a little bit. They were down 16%. That dip's getting eaten really quickly. And they're growing 30% year over year. I mean, you can't imagine that thing to be down that long. Apple is not out yet. Apple's in 10 minutes. Apple's in 10 minutes. That's the big one. Apple's green after hours, but that's the big one. Apple was up 2% on the day. And Coinbase might be down because maybe it was up 10% on the day. And so the street's kind of thinking, all right, we gave it a 10%, but it's not really moving from there. Dude, Coinbase did $1.2 billion in net income. That is insanity. That is absolutely insanity. I mean, that's pretty damn good. Pretty damn good. Oh, Texas Roadhouse has earnings as well. Let's add them to the list. Texas Roadhouse. They this is a restaurant. They are up. They are flat after hours. Texas Roadhouse revenue 12% year over year. EPS 31% year over year. I mean, that's a good beat. They went up a lot. I mean, year to date, I think they're up a lot as well. So that's not too bad. How do you search up earnings so quick? I usually just use Twitter. That's easy to find it out. Year to date they were at 115. They're at 157. We're probably not going to get another squeeze out of Texas Roadhouse. I mean, this thing's pumped a decent amount this year. $10 billion market cap, good earnings for Texas Roadhouse. And that's what we want to see. We don't want to see Starbucks do bad, which is a food and beverage company, and then Texas Roadhouse do bad, because that means people are legitimately not spending money on restaurants. And it's more of a Starbucks thing, it seems. Chipotle crushed earnings, Texas Roadhouse crushed earnings, Domino's crushed earnings, which means so far in Q1, earnings have been good from the food and beverage aisle. even if Starbucks hasn't performed. Monster today as well. They crushed earnings. They're up 5%. Monster, they came in line with revenue, up 12% year over year. It seems more like a Starbucks thing. Seems way more like a Starbucks thing. I remember at Fortinet was a stock that Steve likes. Yeah, it was a stock that Steve liked in the cybersecurity space. Let's see what else we have. Okay, Amgen, they had their earnings revenue of $7.4 billion, up 22% year over year. Non-GAAP EPS of $3.96, down 1% year over year. They lost 21 cents a share, so not profitable, but they are up at $7.4 billion for Amgen. AMGN. They are a biotech company. Market cap for these guys is $150 billion. They're down 2% after hours as well. Coinbase still down 4%. Incredible. Coinbase is still down 4%. What else do we have? All right, put in your price targets for Apple. I'll close the poll right now, or let's look at the finals of the poll. So we had how many votes? We had about 1,300 votes. 52% said dump, 48% said pump. Okay, so I'm going to close the poll. We got more dumps than pumps. Put in your price targets. And again, if you get the exact price or within very close to the price, you'll get a $25 Amazon gift card from me. That's what we've been doing all earnings season. So put in dump or pump on Apple and then your price. So if Apple closes at 183 and you guessed it in the chat, just DM me on Twitter and you will get a $25 Amazon gift card. Square is up 9%. Coinbase down 4%. Open Door up 3.45%. Robinhood basically down 0.62%. And Apple still flat right here on the day. Wow, everyone's saying dump. You guys really are bearish Apple, dude. You guys are really bearish Apple. Goodness gracious. DraftKings, they have their earnings. They're profitable. DraftKings is profitable for the first time. They're up 2%. I thought DraftKings would be up way more than that. Something had to happen for them to not be that much higher. I mean, dude, profitability for the first time for a company like DraftKings is growing like 70% year over year, and now they're growing profitably. That's an exciting thing for DraftKings. It's a very exciting thing for DraftKings. Okay, what else do we have? Coinbase. What else do we see? Open Door up 3.46%. Monster up 3%. Let me pull up Monster's IR, see if we can get some actual coverage there. See what's going on there. So let's look at Monster's press releases and see what they say. Okay, here we go. We got Monster. So let's pull this up. Let's look at Monster. Let's see. Most people are saying dump. So we got Eric says pump to 189.9. I think that's the thing too. Most people are saying dump, so I think that means we pump. I think that maybe that means we pump. Maybe that means actually, wait a second, we're going to come in way better than what people are thinking. Okay, let's go to Monster. It is also down 9% already year to date. Here's Monster. So on Monster, record sales up 12%, $1.9 billion. First quarter net income increases 12% to $442 million. Wow. Net income up 12% year over year. That's incredible. That's not just revenue. That's net income itself. That's profitable. That's profitability. Or actual profits. Wow, they're buying back $3 billion of stock. Company currently intends to commerce tender offer to repurchase up to $3 billion of common stock. Wow, not bad. Net sales for the company's strategic brand segment, which primarily includes the various energy drink brands acquired by Coca-Cola as well, increased 25.6%. Net sales for alcohol brands were up 21%. Chris says shows the trend is moving towards energy. It definitely shows that people are drinking more energy, right? It definitely shows that people are drinking more energy. Operating expenses were $485 million compared with $412. So OpEx was up just a little bit. Distribution expenses were up a little bit as well from 76 to 94. And then operating income was 542 versus 45. That's really great. That's an increase of about 60 million year over year. Some quotes. We achieved another quarter of solid revenue growth with record quarter for sales. The quarter was again impacted by unfavorable foreign currency exchanges. We are pleased to report gross profit margin improvement in the first quarter, which increased significantly when compared to the 2023 first quarter. This improvement was primarily the result of decreased freight and cost, pricing action in certain markets, and lower input costs. Right there, lower input costs. That's nice to see. Another CEO saying, hey, we're not seeing that much inflation. We're not seeing a ton of problems in terms of our supply chain, and that's not affecting our bottom line. That's nice to see from Monster. Monster up 4% right now. Apple still flat. We got Apple in 4 minutes. Get your guesses in. What do you think is going to go? BBAI. Oh, they had earnings today as well. Big Bear. Well, we did talk about this on the market open. This is a meme stock. Down 16% is not surprising to me. Big Bear AI is like honestly, I don't know what they do. They're an AI company. Palantir used to have a partnership with them like 4 years ago. It's not that interesting. It's a penny stock. It pumped like 500% in February. Now it's down basically like 70% since then. I mean, it makes sense that it's down 15%. It pumped in February because like AI was getting like more momentum. And so people just started buying it for the hell of it. But those things are really scary. Those things are very scary. Dude, most people are saying dump to 165. That's what I'm looking at. There's a few of you saying pump to 180. But everyone else is saying dump. All right, this is going to be exciting. I think Apple, I don't know. It's hard. I want to say Apple goes up because they've been hit so badly, but also Apple's just been, dude, Apple is Apple. I mean, Apple, they're not going to put up good numbers. We know they're not going to put up good numbers. It's hard to imagine they have good numbers given what we've been seeing. I don't know. I really don't know. It could probably have more downside pressure if Tim Cook doesn't have anything interesting. But if we get a dividend, if we get an increase of a dividend, that's going to be more excited. Someone says Apple Vision Pro failed miserably. Tell me who thinks in the chat Apple Pro failed. Vision Pro failed. Do you think the Vision Pro failed? Put it in the chat. Do you think the Vision Pro failed or not? Very curious to see what people have to say here on that. Real quick, we got like 2 minutes until they put out earnings. Let's get Josh Brown's perspectives. The numbers aren't going to be out literally at 4:30. I'll keep an eye on it, and then we'll keep going from there.
Because this is obviously a amazing long-term investment, but it's had a tough time, especially when you look at it relative to the stocks we usually compare it to. You look at it relative to Microsoft, for example, Amazon, Alphabet. It really seems like there's something wrong, but in reality, there's nothing wrong. It's just that $3 trillion businesses don't grow as fast as $300 billion businesses. The emphasis has to start to shift on where they're making their money. And so that's why we talk more about services than we talk about handsets, or we talk about phones or units. Okay, fine. So they have successfully migrated us mentally more toward services and profits. I think that's great. Still half the business. Hugely important. It's $200 billion out of $400 billion. We can't ignore it. We just understand that everyone that wants an iPhone has one. It's now a replacement cycle business for the most part. Yes, they can go into Latin America and India. They are not going to get the same price points that they get when they sell in Western Europe and the United States, period, end of story. So it's just not going to do what the Apple of the last 10 years have done. That being said, and this is really important, analysts are looking for $1.51 in earnings per share, $90.5 billion in revenue for the quarter. That's down 4.5% year over year. That would be the fifth consecutive quarter-over-quarter revenue, the fifth quarter-over-quarter revenue drop.
All right, it's time. It's 4:30. Here we go. We all stare at Apple now. Wow, it's green. It's green. It's green. So far, it's green. Up 1.43. Up 1.43. It's green. Can the green keep going, baby? Can we keep going? We're up 2%. Come on, man. Give us a 7%. Give us something good, Apple. Give us something good. It's trying to find 3%. Wow, dude. It's fighting in real time to maintain these gains. Go, Apple, go. Get some potassium in you and go. Even if you're not as appealing as a banana, go. Come on, 2.5. Again, this is good for the stock market if Apple goes up. Unless you have your puts. If you have your puts, then whatever. But let's see. Dude, look at this green candle. It's just fighting. Okay, it might be breaking out. Getting some buys in. Getting some buys up 2.89. It wants to see 3%. It wants to see 3. Dude, if it goes back to 185, the red candle is right there. No, it's fighting. There we go, 3%. We're at the threes. We're up 3%. What do they do? They increase the dividend? Holy crap. Hold on. I'm trying to find it. $110 billion buyback. EPS 153 beats 150. Sales 90.8 billion beat 90 billion. They beat revenue by 800 million. They beat EPS by 3 cents. They're buying back $110 billion of stock. Not that exciting, quite frankly. Unless I'm missing the dividend news, which I don't see right. Oh, they did. They increased the dividend. they increased. What the fuck is that? They increased the dividend by 1 cent, dude. Well, it's up. They increased the dividend from 24 cents to 25 cents. Fucking Apple, dude. They were like, you know what? We got to do something because we don't know what to do with AI. How about a 1 cent increase? Well, it's pumping. Look at this. It worked. Now, look, it maybe doesn't mean that much, but if you're like Warren Buffett, dude, that 1 cent is going to be hundreds of millions of dollars, I imagine, or like tens of millions of dollars for all of his. He has 47% of Berkshire in Apple. So they're going to be paying him a nice check. Wow. So the dividend is now 25 cents and they're giving you $110 billion in buybacks. Huh. Apple. Interesting. Boost quarterly. Yeah, there it is. You got the dividend. That's it. That's what's pumping. Let's go to CNBC. Let's see what they're saying. They should be having this right now as it's breaking. Let's pull this up. Give me 1 sec, guys. 1 sec. Let's pull it up. Okay. So $110 billion in buybacks, and we have the dividend. All right, let's pull this up right here. Here is Apple. Here we go. Here's Apple. Right here. Okay. This is interesting.
Expected. And as for that buyback, $110 billion. Like I said, that's the largest ever announced. That's according to Birani Associates. And then a dividend is increasing to 25 cents a share. And just a couple little segment revenues here. Let's go over iPhone. A slight miss of expectations at $45.96 billion. That's down better than 10% year over year. And then services, a slight beat here, $23.9 billion. That's up nearly 14%. And then as for China, I know that's a big question going to here. Sales in Greater China down 8%. We see shares reacting here about up 3% or so after hours, Sean.
All right, Steve, come back to you when you have more. Amit down 8%, but beat across the board, it sounds like.
Is he talking to me? He just said Amit. Are we talking? Am I talking to this guy?
Is that good enough?
I mean, listen, down 8 is
Never mind. It's a different Amit.
much better than what they did last quarter, right? It was down 12-13. So I'll tell you, this number is actually, at first glance, much better than expected in China. Almost tells you perhaps the negativity around China may have been overdone over here. Certainly the buyback helps. So one thing I want to go back to this AI dynamic. I think it's crucial to understand Apple can afford to be behind on AI versus their peers because AI is not an existential threat to them as it might be for some other companies who are way more vocal and ambitious with how they're investing in it.
Plus, Angela.
That Amit has the wrong analysis. AI is absolutely an existential threat for Apple. Fundamentally disagree. Not the correct. I disagree with that, Amit.
So Apple's peers are going to be paying them to get their AI out there, right?
Yeah, I mean, you would think so. I mean, and I think the comment was just made, great in terms of, the CapEx landscape out there. You kind of look at some of the capital intensity numbers out there for, some of the other Mag 7 names, whether it be, a Meta out there, which is closer to 25%, or, some of these cloud players in the mid-teens or so. It's really interesting when you look at Apple's capital intensity ratio, closer to about 3 to 4%. So they don't need to kind of spend aggressively in terms of to get this AI story right. And that's kind of part of the thesis as far as Apple is concerned, and the trajectory here of their free cash flow generation long term. And speaking of just kind of the free cash flow, I think that $110 billion really I'm really excited about that. I think that's kind of a table pounder as far as what Apple is throwing out there and kind of their conviction level long-term about their business prospects.
Yep, more than a little bit of money. All right, if you watch Apple results on Overtime, and of course you do, Steve Kovac tends to have some conversation with Tim Cook.
We'll go back to that in a second. So yeah, the reason I disagree that AI is not an existential threat is because if the new iPhone doesn't have AI-enabled features, there's not going to be a reason for people to upgrade. Like, ask yourself, would you upgrade if, Siri can't finally tell you something about the world without having to search Google to give you an answer, right? So I do think that AI is an existential threat, and I think if they don't have a generative AI vision, along with the fact that the electric vehicle is done, right? They were thinking about doing humanoid robotics. I don't know if Apple's going to get into that. The Vision Pro is probably not that interesting. So what do you have left? either you increase the dividend by 5% and you become a dividend paying company, or AI is the future. And so far, I don't think they have an AI vision, which is why I do believe it is a big deal for Apple today. So up 3.8% to increase the divvy by 1 cent. Not that exciting, but it is something. Square, it went from being up 10% to being up 4%. Nothing special with Square. DraftKings, 1.39. I got to give Jack Dorsey credit. The last earnings call, he did a phenomenal job. It was a really good earnings call. Bitcoin has fallen, and I guess that's why Square has continued to take a dip. Big Bear down 15%. Robinhood's down 1% because Coinbase is down. Coinbase is still down 2%. That's annoying, dude. I don't think Coinbase should be down this much. I think Coinbase deserves a little bit more of a pump, but we'll see, I guess, what happens. Apple 173. The problem with this Apple move is that it's kind of boring. Like I mean, they could be down 1 to 3% every single day. They're going up or down 1 to 3%. So I guess the call will give us more clarity, but I don't know if we're going to get an extreme move to the downside or the upside. The good thing is it is green, and we need Q1 earnings to be green because so far inflation has been sticky. And until inflation is not sticky, then Coinbase needs to be a bit, or Apple, tech needs to do well. Fortinet down 10%. Are you going to watch Coinbase earnings call? No, we'll do Apple. I think Apple's a bit more important than Coinbase. I am interested in what Coinbase has to say. Let me see what time. Maybe we can squeeze both in to an extent. So let's see what time Coinbase starts, and then I'll pull up their deck. Okay, so let me pull up their numbers, and then we'll go back to CNBC. Let me pull up all the numbers I need, and then we'll figure out the earnings calls. Here we go.
About this. Let's get back to him now. What do you got, Steve?
Yeah, sure, John. So I did catch up with Tim Cook on these results, and he broke with tradition a little bit and gave some guidance. He said to expect for the June quarter revenue to be up in the low and single-digit percentage points. So that is one thing. We're going to get more color on the guidance on the call, but they did get Tim Cook did give us some guidance there. And then as for some other things I talked to him about, I did press him a little bit on China. As we know, there have been some issues there, low demand and so forth. Here's where he told me about what's going on in China. This is back off a trip. He was there several weeks ago, opening a store in Shanghai. He told me, quote, "I feel great that in an extraordinary competitive environment that we grew iPhone sales in mainland China last quarter. That may come as a surprise to some people. And so I feel good about China. I think more about long-term than I do the next week or so." And then, of course, another big question going into this earnings report, John, was artificial intelligence and where Apple kind of plays into that whole narrative that its peers are talking about. And we focused a little bit on hardware because this was also the quarter they announced that M3 MacBook Air, which they're marketing as an AI PC. He told me, quote, "We've been shipping a neural engine since 2020. And so we've been working on AI from a silicon point of view for years before that to be able to ship it in 2020. And so I think we have a huge opportunity here. And as people start using AI more, there's a big opportunity here," end quote. And of course, we're expecting more details on that. Tim Cook also teasing to me more to come on artificial intelligence, presumably at WWDC, but he wouldn't say much more than that. And then I also asked Mr. Cook about the DOJ antitrust case and how that kind of plays in. It's coming at this interesting moment for Apple as it is on the cusp of this AI revolution. Here's what he told me about the antitrust case, quote, "I think the case is misguided and we're going to fight it. It's my job to make sure it doesn't become a distraction. And so if you look at it, what they're trying to do is essentially use the law to define how we design. And that shouldn't be like that," end quote. So obviously, we know from Microsoft 20 years ago, there's that kind of narrative out there from Bill Gates and others that it distracted them and made them fall behind. Tim Cook telling me that's not going to be the case at Apple, John.
All right, Steve Kovac, and as you've been talking and giving that commentary from Tim Cook about June revenue being up, we've also seen the stock move up in overtime, now about 4% higher. It was about 3% higher before.
So we got the Apple call in 20 minutes, guys. Did anyone guess this number? Did anyone guess the number on the bet? Where is it? It's at 180 right now. We're up 4%. Not bad. Let's see if it can continue to keep going. Up 5%. Nothing crazy, but still good. Still very good. 4.4%, 180, trying to get to 181. So Tim Cook, you heard on CNBC, he says we are promising there will be some AI plans in the future. And I guess that means that I don't know if he has any AI plans. He's just saying, well, they're coming in the future. So I trust Apple's going to have something. I just don't know what yet. $110 billion though, bro. 110 billion of stock. Like 110 billion. That's a lot of money to do buybacks on. That's a lot of money. $110 billion they're putting back into their own stock. Do you guys think that's a good move? Because I kind of think, I don't think it's a move of, I mean, look, I don't know if it's necessarily a weak move, but it's definitely one of those things where it's like, well, I don't think they know what to do with the money. I would rather, if I was an Apple shareholder, I would rather have them buy Peloton. Okay. Why? I've been saying this for a while. Oh, Apple 183. Oh, it's pumping. It's pumping. It's pumping. It's actually getting some pump. It's getting some love. It's getting some love. There we go. 183 up almost 6%. There we officially 6%. 185. Is that on the target? We haven't seen 180 on Apple. Last time we saw 180 on Apple. Last time we saw 180. Let's see. Over the past year, last time we saw 180 was January. Literally January. January 5th was the last time we saw 180. The last time. Now we're at 183.4. I think they should buy Peloton or they should buy something with their cash. I mean, if you just look at Peloton, right? Peloton's market cap is $1 billion. You're telling me Apple can't buy this for $1 billion, put a Peloton in every single showroom, and then sell a crap ton of these? You know what I'm saying? Like, but just like moves like that, I think are very possible that could happen for Apple. And if it does happen, I think that would be exciting, you know? Now, granted, buying back their stock maybe is better than buying something like Peloton, but I don't know. $110 billion is a lot. Apple now up 6.4%. It's trying to get to one. There we go. 184. Wow. It's pumping. It's really pumping. It's really pumping. June said you sold your Apple at 195. Okay. Not a bad sell. Apple's buying back 2 Palantirs, right? That's insane, dude. That's legit insane. 2 Palantirs Apple's buying back. 2 freaking Palantirs. Where's Coinbase? Is Coinbase still stuck? Dude, the Coinbase thing makes no sense. Wow, Coinbase down 3%. Dude, it's got to be Bitcoin. The market's got to be upset about Bitcoin. That's what's going on. If Bitcoin was at like 65,000, there's no way this thing would be down 3%, dude. That's so interesting, man. That's so interesting. It's incredible. Square's up 6%. Even Square's up. Apple's up 6.4%. This is the move I think people were looking for. 6.4%. 6.4% on a $2.67 trillion company. It's billions of dollars, tens of billions of dollars. It's a lot of money. So not bad. Not bad at all. Palantir should just buy back 2 Palantirs. That would be so nice. That would be so nice. Apple market cap's up 250 billion so far today. Is that correct? Is that? Oh, let's ask Siri. So let's ask Siri. Hey Siri, what's 6% of 2.6 trillion? 156 billion. 156 billion. So maybe so it doesn't seem. Oh, it's up 250 billion today because they were up 3% in the morning. Yes, that's correct. But so Apple after hours has added 156 billion to their market cap. It's a lot of money, dude. They basically added all the money they're using to buy back and 50 billion more. That's kind of insane. Did I activate your guys' Siri? That's so funny. Where's Texas Roadhouse? Is they're flat, but they had good quarter. Coinbase is red, Fortinet's red 10%, and then Cloudflare is down 12%. All right, let's get back to coverage. We got the call in 15 minutes, and we'll see what Tim Apple has to say. Oh, Amit's talking again. Let's let Amit talk. Here we go.
For Amit Daryanani, your reaction to what Tim Cook said about June revenue and doubling down on what he said before about Apple's preparation based on its vertical integration for the AI era.
Yeah, John, the low single-digit uptick in guide growth in June quarter is way better than I think what buy side was expecting, right? The fear was they're going to guide for modest declines in June. Things get worse, not get better the way they're guiding. So that's notable. Also, in the fact that it's calling out iPhone unit growth in China is notable despite the 8% down. It sounds like mainland China, they did grow units, so that's good. Listen, I think from the sound of it, this sounds like the call should be incrementally better. And if June is a trough and things start to recover in the back half, this should set this company up very well into the back half of the year where they have a whole bunch of catalysts in their favor.
Angelo, is there a narrative shift here perhaps if units in China are doing that at this time of year? I mean, we know Apple's not going to say so, but we know new iPhones are coming at the end of the year. So if they're even doing okay in units at this stage, that might set them up nicely, no?
We think so. I mean, you kind of think about going into the second half of the year as far as iPhones specifically are concerned. And I would agree in terms of kind of our expectations going into the June quarter. We did expect a guide down. The commentary on China much more bullish and positive than we anticipated. But going into the second half of the year, as we think about China specifically, we do think kind of Apple lacked two core features across their ecosystem on the premium side of the market. That being an AI-enabled type of device, and second, foldable devices. Those are two areas where a lot of these kind of emerging kind of China-based providers are really starting to kind of differentiate themselves out there with some of the with what Apple is doing. But the fact that Apple is going to roll out an on-device kind of AI device out there here in the second half of the year, I think the setup is really good for Apple. And then, of course, as we kind of go into calendar 2025, given what they just reported in terms of China here this last quarter and in the December quarter, there is kind of an easier kind of bar for them to meet as we start that iPhone 16 cycle in China.
Steve Kovac, I want to go back to you for a moment because you're there in Cupertino. You talk to Tim Cook there in person, and you know this company. And despite how big
Apple's up 6.5%.
It's gotten, part of its DNA is this underdog sense of everybody doubts us, everybody's against us, and it seems in the stock market like that's emerged again. What's your sense of Tim Cook's comfort level with the doubts being out there about Apple and what it can do next?
I'll quote what he told me, and he said, "I'm literally on the edge of my seat, John." This is when he was talking about these AI announcements that they're planning soon. So maybe we'll get a little more color of that on the call, but it sounds like they're really teasing whatever it is they're working on the artificial intelligence side, that this is going to be something big. So this is, in my view, going to be probably the most important developers conference that they've ever did. Forget about the Vision Pro last year. That was great and interesting. But this is the cusp of the new AI revolution. And we're finally going to find out where Apple's part plays. Tim Cook, I was just sitting next to him not just minutes ago. He seemed excited about it. So that is what they're talking about now. And that is going to be, the story in the back half of the year, I think.
I mean, is it about software now?
That's the next step. Yeah, that's exactly it.
Okay, let's go to some of their numbers as well and see what else we've got going on Apple. We got the call, guys, in 11 minutes, and we'll see what Apple says. So as you can see right here, iPhone revenue, $45.96 billion versus 46. A little bit lower, right? A little bit lower than expected. But basically, I mean, that's like within the margin of error. 7.5 billion on Mac. That's better than 6.86 billion. iPad revenue, 5.6 billion versus 5.9. I did buy an iPad Pro in Q4, not Q1. I don't use it at all. I really wasted $1,100 there. So let me know in the chat if you guys use your iPad, but I'm surprised people are buying as many iPads as they are. 5.6 billion there. Other products of revenue, 7.9 billion. Services, 23.9 versus 23.27. That's good. Gross margin, 46.6%. So no basis point increase on that to the upside or the downside. Revenue is pretty much in line. And then EPS, they beat by 3 cents a share. 23.64 billion in net income, 2% decrease. So they're about 2% lower than last quarter in decrease. Here's a question. That is the best product. Okay, so a lot of kids use iPads. That's correct. A lot of kids use iPads. Here's a question I have for you guys. Some of you guys will get triggered by this question. Some of you guys will not. Should Apple take some of that 110 billion they were using to buy back stock, and should they buy Bitcoin? I mean, it's not the craziest thing in the world, dude. It's not you either believe it or you hate it, but imagine they said today they're going to put 5 billion into Bitcoin. 5 billion is not that crazy, dude. It's like, it is a small amount of the overall assets and cash that Apple has. I think Bitcoin might be more valuable than Apple stock over the next decade. I mean, Apple has to keep innovating. Apple has to keep innovating and proving they're like the best tech company in the world for them to double or triple in the next 10 years, right? And that would be from 2.6 trillion to close to 10 trillion. Bitcoin just needs the government to keep spending money, quite frankly. That's pretty much it. And if they keep doing that, Bitcoin's going to double, triple, quadruple, a lot more than that if the government keeps printing. It's so polarized in the chat. Everyone's like, yes. Everyone's like, no. I don't think it's that crazy. I don't think it's that crazy for them to put a little money in Bitcoin. It would, you know what? It would have shown Tim Cook has some. It would have shown Tim Cook has some. Wow, Apple's up 7%. It would have shown Tim Cook has a little bit more originality in terms of his ideas if he bought some Bitcoin, or his shareholders like Buffett that calls Bitcoin, rat poison and trash. Maybe he would have hated it, and maybe he would have politely called Tim Cook and told him to sell that Bitcoin that Tim Cook's buying. So it could have gone one way or the other. But I think Tim Cook would have taken a risk, and Tim Cook doesn't tend to take risks. So that's probably why he will never do that. Apple right now is up 7%, folks. It's up 7%. It's up 7% right now on Apple. Coinbase is at 5:30. Coinbase is at 5:30. So we're going to be listening to Apple. I've actually never really listened to a full Apple's call. I think I've heard like bits and pieces, but this is going to be the first time I'm listening to the full call. And it'll be good to listen to it. Apple's up 7%, dude. That's not bad. That's what we want to see. We want to see Apple pump. It's a big tech. And Nvidia's left. If Nvidia does it, we'll be 7 for 7. I mean, even Tesla with their horrible numbers, they still had a good earnings from a qualitative perspective. If Apple's crushed it, it seems like at least the market's reacting. If Nvidia crushes it, we're 7 for 7. You know what's interesting though? Let me ask you guys this question. We got the call in 8 minutes. Let me ask you this question. Let's say Apple was down 7%. Based on the numbers, let me put them back on the screen. Based on these numbers, this is a serious question. Based on these numbers, if Apple was down 7% right now, based on increasing the dividend, doing the buyback, and these numbers you're looking at on the screen, do you think you could justify it or no? Do you think you could justify it or no? Because I kind of think you could justify them being down 7% as much as you could justify them being up 7%. Now, the dividend and the buybacks are obviously helping, but still, I think you could justify these numbers. Yeah, I could see them down 7%. And I think if they didn't announce the share buyback or the dividend, they probably would be down 7% as iPhone sales have dropped 10%, right? If Apple hits 150, I'll start buying it in my wife's dividend portfolio. Yeah, you're going to get a nice dividend now on this extra 1 cent. Yes, because of valuation. Yeah, I think that's fair as well. Not sure why they aren't down. I think it's the divvy. I think the divvy is keeping them alive. Let's get some more coverage, and then we'll get the call in about 7 minutes.
I talked to him about hardware, and he did talk, like I just read off to you. He talked about the chip work that they've been doing. We already know the success they've had there. But yeah, the next step is software. What does that look like on the iOS 18 layer that they're going to announce at WWDC on the software, the user-facing stuff? For many years, as I've done these interviews with Tim Cook, he's told me about the AI that's happening behind the scenes. You know, every time you take a photo on Vision Pro, the way it maps the room around you and things like that. They're used to talking about AI in that way, but as far as a consumer-facing way, this is going to be a new thing for Apple to start showing off.
All right, Steve Kovac, thank you. I'll let you prep for that call. Amit Daryanani, Apple's authorized a big buyback at a time where its stock, I mean, it's relatively cheaper than some of the other big names. What's the implication there for earnings per share? Let's see. Do you have an audio issue?
Yo, Amit just pulled an Amit. He actually is muted. This is crazy. He's actually muted. If you have my name, don't get on TV. You're going to be muted. This is crazy. He's supposed to be the professional, and he's muted. This is crazy.
Okay, hold on. I can't hear you, Amit. I'm sorry, so I'm going to swing that over.
I'm right here.
Do you have him now?
I was just saying, one of the positives Apple has right now from a cap allocation basis is they don't have to invest in CapEx as aggressively as others do on AI. They can afford to do that back to their shareholders in terms of returning money.
What is this dude saying, bro? What does he mean they don't have to spend that much on CapEx when it comes to AI? I don't get his argument here. I think they do have to spend that much on AI. And if they don't, they're not going to have an AI vision. So he's saying, oh, they don't have to spend that much on H100 so they can give back to their shareholders. I don't know if that's necessarily true. I think they do have to spend a bit more, or else they're not really going to have an AI vision.
If they do it, the cadence they're doing it right now, I think what that really means is 300 to 400, maybe 300 to 500 basis points of incremental EPS growth over the next 4 years that can come from buyback. So it's a nice little kicker to enable double-digit low teens EPS growth in this model on a multi-year basis.
All right, Amit, Angelo, I'll let you get ready for that call as well as we await more detail.
The only reason you don't have to spend that much on CapEx when it comes to AI is because Amit obviously feels that Apple has the distribution, and other companies, Apple right now up 7.2%, can use their distribution to be able to deliver their AI products. If that's the case, then this will just become another Google paying Apple $20 billion a year to be the default search engine, which, yes, Apple will make a lot of money from that. But is that really an AI vision? I don't think so. Where is Apple's LLM? Where's their way of incorporating it? I mean, if Apple had a proprietary LLM built into the iPhone itself, which maybe that's what they're going to announce, which, yeah, you would need some H100s to pull that off. I think that would be exciting. Now, could you partner with GPT and OpenAI and do that? Sure. But I don't know if that's exactly the AI vision the street wants. And I also think that's going to give way more leverage to something like an OpenAI versus keeping it proprietary in-house. And also then you have to deal with the confidentiality, security. What does it mean for OpenAI to have everyone's user data and incorporate it into an LLM powered by OpenAI's GPT on the iPhone itself? Like, it brings up a lot of questions, and maybe Apple's relying on them not having to build the tech themselves, which means then, yeah, they can give it back to shareholders. But I think they definitely do need to have some more of an AI vision. Here you go. 185 on Apple, up 7%. Again, I am very happy Apple is up because I want the market to sustain itself. Right now, inflation is really sticky. Shelter and oil should be coming down, but they have not come down in core PCE or in headline CPI. And if you don't have companies putting up numbers and you have inflation being sticky, the market's screwed. Like there's just no point, to there's no hope for the market. Companies have to put up the numbers to give inflation time to come down, or else the market's not going to have a real reason to bet on Apple. I think we have a money market fund update. Do we have it? Yep, here we go. All right, we got money market fund updates. What do you think? Increase or decrease? What do you guys think? Increase or decrease? We got 3 minutes until the call. So this will be the last thing we do before the call for Apple. Thank you, everybody, for being here today. Increase or decrease? Last week, we increased money markets by $9 billion and had $5.98 trillion in the overall money markets. Every Thursday, it's updated. I just got the update. What do you guys think? Up, up, up. Market fund updates mean the amount of money that's on the sidelines that's in money markets, collecting 5.25% to 5.5%. And basically money that's on the sidelines that's not taking a risk in the market, getting risk-free money because of the interest rates. More money on the sidelines means less money in equities, or like theoretically, it's not a one-to-one proportional relationship, but that's the kind of argument. Okay, I see a lot of increases. The answer is increased by $23 billion. We now have $6 trillion as of May 1st in the money market funds. There we go. 23 billion to 6 trillion. I mean, this is not that crazy. You know, markets fell. People probably sold, took that money, put it into money market funds. So I would expect this to decrease once inflation comes down. And that's the problem. Inflation is not coming down, which is why Apple needs to be up, because if Apple's not up, then that's the hard part. Or that's why, big tech in general needs to do well. Okay, here we go. Here's the call. It'll be live here. We're going to test something real quick, guys. I'm going to remove the screen, try to put the stock on the screen while the audio's in the background. Let me know if the audio's in the background. Okay, so if I do this, if I do this, do you guys hear the audio or no? Do you guys hear the audio? Probably not. Probably not. No, you don't hear it. Yeah, you don't hear it. You don't hear it. My goal is I want to show that you do, but it's slow. Yeah, it's coming from my mic. I want to show the stock while the audio is in the background, but I haven't figured out how to do it. And I don't think StreamYard allows you to do it, which is the annoying part. The only reason you're hearing the audio is from the back, is from the mic. It's from the mic. That's the problem. It's very faint. Yeah, it's very faint. That's the problem. Dude, I wish I could show the stock while the audio is playing. I'll show you on my phone. I don't know why StreamYard doesn't allow that feature, or I haven't figured out how to do it yet. Jesse doesn't use StreamYard. He uses something else. I'll figure it out.
Good afternoon.
All right, here we go.
Welcome to the Apple Q2 fiscal year 2024 earnings conference call. My name is Suhasini Chandramouli, Director of Investor Relations. Today's call is being recorded. Speaking first today is Apple's CEO, Tim Cook, and he'll be followed by CFO, Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of macroeconomic conditions on the company's business and results of operations. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed annual report on Form 10-K and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements, which speak only as of the date they are made. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Suhasini. Good afternoon, everyone, and thanks for joining the call. Today, Apple is reporting revenue of $90.8 billion and an EPS record of $1.53 for the March quarter. We set revenue records in more than a dozen countries and regions. These include, among others, March quarter records in Latin America and the Middle East, as well as Canada, India, Spain, and Turkey. We also achieved an all-time revenue record in Indonesia, one of the many markets where we continue to see so much potential. In services, we set an all-time revenue record, up 14% over the past year. Keep in mind, as we described on the last call, in the March quarter a year ago, we were able to replenish iPhone channel inventory and fulfill significant pent-up demand from the December quarter COVID-related supply disruptions on the iPhone 14 Pro and 14 Pro Max. We estimate this one-time impact added close to $5 billion to the March quarter revenue last year. If we remove this from last year's results, our March quarter total company revenue this year would have grown. Despite this impact, we were still able to deliver the records I described. Of course, this past quarter, we were thrilled to launch Apple Vision Pro, and it has been so wonderful to hear from people who now get to experience the magic of spatial computing. They describe the impossible becoming possible right before their eyes, and they share their amazement and their emotions about what they can do now, whether it's reliving their most treasured memories or having a movie theater experience right in their living room. It's also great to see the enthusiasm from the enterprise market. For example, more than half of the Fortune 100 companies have already bought Apple Vision Pro units and are exploring innovative ways to use it to do things that weren't possible before. And this is just the beginning. Looking ahead, we're getting ready for an exciting product announcement next week that we think our customers will love. And next month, we have our Worldwide Developers Conference, which has generated enormous enthusiasm from our developers. We can't wait to reveal what we have in store. We continue to feel very bullish about our opportunity in generative AI. We are making significant investments, and we're looking forward to sharing some very exciting things with our customers soon. We believe in the transformative power and promise of AI, and we believe we have advantages that will differentiate us in this new era, including Apple's unique combination of seamless hardware, software, and services integration, groundbreaking Apple Silicon with our industry-leading neural engines, and our unwavering focus on privacy, which underpins everything we create. As we push innovation forward, we continue to manage thoughtfully and deliberately through an uneven macroeconomic environment and remain focused on putting our users at the center of everything we do. Now let's turn to our results for the March quarter across each product category, beginning with iPhone. iPhone revenue for the March quarter was $46 billion, down 10% year over year. We faced a difficult compare over the previous year due to the $5 billion impact that I mentioned earlier. However, we still saw growth on iPhone in some markets, including mainland China, and according to Kantar, during the quarter, the two best-selling smartphones in urban China were the iPhone 15 and iPhone 15 Pro Max. I was in China recently where I had the chance to meet with developers and creators who are doing remarkable things with iPhone. And just a couple of weeks ago, I visited Vietnam, Indonesia, and Singapore, where it was incredible to see all the ways customers and communities are using our products and services to do amazing things. Everywhere I travel, people have such a great affinity for Apple, and it's one of the many reasons I'm so optimistic about the future. Turning to Mac, March quarter revenue was $7.5 billion, up 4% from a year ago. We had an amazing launch in early March with the new 13 and 15-inch MacBook Air. The world's most popular laptop is the best consumer laptop for AI, with breakthrough performance of the M3 chip and its even more powerful neural engine. Whether it's an entrepreneur starting a new business or a college student finishing their degree, users depend on the power and portability of MacBook Air to take them places they couldn't have gone without it. In iPad, revenue for the March quarter was $5.6 billion, 17% lower year over year due to a difficult compare with the momentum following the launch of M2 iPad Pro and the 10th generation iPad last fiscal year. iPad continues to stand apart for its versatility, power, and performance. For video editors, music makers, and creatives of all kinds, iPad is empowering users to do more than they ever could with a tablet. Across wearables, home, and accessories, March quarter revenue was $7.9 billion, down 10% from a year ago due to a difficult launch compare on Watch and AirPods. Apple Watch is helping runners go the extra mile on their wellness journeys, keeping hikers on course with the latest navigation capabilities in watchOS 10, and enabling users of all fitness levels to live a healthier day. Across our watch lineup, we're harnessing AI and machine learning to power life-saving features like irregular rhythm notifications and fall detection. I often hear about how much these features mean to users and their loved ones, and I'm thankful that so many people are able to get help in their time of greatest need. As I shared earlier, we set an all-time revenue record in services with $23.9 billion, up 14% year over year. We also achieved all-time revenue records across several categories and geographic segments. Audiences are tuning in on screens large, small, and spatial, and are enjoying Apple TV Plus originals like Palm Royale and Sugar. And we have some incredible theatrical releases coming this year, including Wolves, which reunites George Clooney and Brad Pitt. Apple TV Plus productions continue to be celebrated as major awards contenders. Since launch, Apple TV Plus productions have earned more than 2,100 award nominations and 480 wins. Meanwhile, we're enhancing the live sports experience with a new iPhone app, Apple Sports. This free app allows fans to follow their favorite teams and leagues with real-time scores, stats, and more. Apple Sports is the perfect companion for MLS Season Pass subscribers. Turning to retail, our stores continue to be vital spaces for connection and innovation. I was delighted to be in Shanghai for the opening of our latest flagship store. The energy and enthusiasm from our customers was truly something to behold. And across the United States, our incredible retail teams have been sharing Vision Pro demos with customers, delighting them with the profound and emotional experience of using it for the very first time. Everywhere we operate, in everything we do, we're guided by our mission to enrich users' lives and leave the world better than we found it. Whether we're making Apple Podcasts more accessible with a new transcripts feature, or helping to safeguard iMessage users' privacy with new protections that can defend against advances in quantum computing. Our environmental work is another great example of how innovation and our values come together. As we work toward our goal of being carbon neutral across all of our products by 2030, we are proud of how we've been able to innovate and do more for our customers while taking less from the planet. Since 2015, Apple has cut our overall emissions by more than half, while revenue grew nearly 65% during that same time period. and we're now using more recycled materials in our products than ever before. Earlier this spring, we launched our first ever product to use 50% recycled materials with a new M3-powered MacBook Air. We're also investing in new solar and wind power in the US and Europe, both to power our growing operations and our users' devices. And we're working with partners in India and the US to replenish 100% of the water we use in places that need it most, with the goal of delivering billions of gallons of water benefits over the next 2 decades. Through our Restore Fund, Apple has committed $200 million to nature-based carbon removal projects. And last month, we welcomed 2 supplier partners as new investors who will together invest up to an additional $80 million in the fund. Whether we're enriching lives of users across the globe or doing our part to be a force for good in the world, we do everything with a deep sense of purpose at Apple. And I'm proud of the impact we've already made at the halfway point in a year of unprecedented innovation. I couldn't be more excited for the future we have ahead of us, driven by the imagination and innovation of our teams and the enduring importance of our products and services in people's lives. With that, I'll turn it over to Luca.
Thank you, Tim, and good afternoon, everyone. Revenue for the March quarter was $90.8 billion, down 4% from last year. Foreign exchange had a negative year-over-year impact of 140 basis points on our results. Products revenue was $66.9 billion, down 10% year-over-year, due to the challenging compare on iPhone that Tim described earlier, which was partially offset by strength from Mac. And thanks to our unparalleled customer satisfaction and loyalty and a high number of customers who are new to our products, our installed base of active devices reached an all-time high across all products and all geographic segments. Services revenue set an all-time record of $23.9 billion, up 14% year-over-year, with record performance in both developed and emerging markets. Company gross margin was 46.6%, up 70 basis points sequentially, driven by cost savings and favorable mix to services, partially offset by leverage. Products gross margin was 36.6%, down 280 basis points sequentially, primarily driven by seasonal loss of leverage and mix, partially offset by favorable costs. Services gross margin was 74.6%, up 180 basis points from last quarter due to a more favorable mix. Operating expenses of $14.4 billion were at the midpoint of the guidance range we provided and up 5% year-over-year. Net income was $23.6 billion, diluted EPS was $1.53 and a March quarter record, and operating cash flow was strong at $22.7 billion. Let me now provide more detail for each of our revenue categories. iPhone revenue was $46 billion, down 10% year-over-year, due to the almost $5 billion impact from a year ago that Tim described earlier. Adjusting for this one-time impact, iPhone revenue would be roughly flat to last year. Our iPhone active installed base grew to a new all-time high in total and in every geographic segment. And during the March quarter, we saw many iPhone models as the top-selling smartphones around the world. In fact, according to a survey from Kantar, an iPhone was the top-selling model in the US, urban China, Australia, the UK, France, Germany, and Japan. And the iPhone 15 family continues to be very popular with customers. 451 Research recently measured customer satisfaction at 99% in the US. Mac revenue was $7.5 billion, up 4% year-over-year, driven by the strength of our new MacBook Air, powered by the M3 chip. Customers are loving the incredible AI performance of the latest MacBook Air and MacBook Pro models. And our Mac installed base reached an all-time high, with half of our MacBook Air buyers during the quarter being new to Mac. Also, customer satisfaction for Mac was recently reported at 96% in the US. iPad generated $5.6 billion in revenue, down 17% year over year. iPad continued to face a challenging compare against the launch of the M2 iPad Pro and iPad 10 generation from last year. At the same time, the iPad installed base has continued to grow and is at an all-time high, as over half of the customers who purchased iPads during the quarter were new to the product. In addition, the latest reports from 451 Research indicated customer satisfaction of 96% for iPad in the US. Wearables, home, and accessories revenue was $7.9 billion, down 10% year over year due to a difficult launch compare. Last year, we had the continued benefit from the launches of the AirPods Pro 2nd generation, the Watch SE, and the first Watch Ultra. Apple Watch continues to attract new customers, with almost 2/3 of customers purchasing an Apple Watch during the quarter being new to the product, sending the Apple Watch installed base to a new all-time high. And customer satisfaction was recently measured at 95% in the US. In services, as I mentioned, total revenue reached an all-time record of $23.9 billion, growing 14% year over year, with our installed base of active devices continuing to grow at a nice pace. This provides a strong foundation for the future growth of the services business as we continue to see increased customer engagement with our ecosystem. Both transacting accounts and paid accounts reached a new all-time high, with paid accounts growing double digits year over year. And paid subscriptions showed strong double-digit growth. We have well over 1 billion paid subscriptions across the services on our platform, more than double the number that we had only 4 years ago. We continue to improve the breadth and quality of our current services, from creating new games on arcade and great new shows on TV Plus, to launching additional countries and partners for Apple Pay. Turning to enterprise, our customers continue to invest in Apple products to drive productivity and innovation. We see more and more enterprise customers embracing the Mac. In healthcare, Epic Systems, the world's largest electronic medical record provider, recently launched its native app for the Mac, making it easier for healthcare organizations like Emory Health to transition thousands of PCs to the Mac for clinical use. And since the launch of Vision Pro last quarter, many leading enterprise customers have been investing in this amazing new product to bring spatial computing apps and experiences to life. We are seeing so many compelling use cases, from aircraft engine maintenance training at KLM Airlines, to real-time team collaboration for racing at Porsche, to immersive kitchen design at Lowe's. We couldn't be more excited about the spatial computing opportunity in enterprise. Taking a quick step back, when we look at our performance during the first half of our fiscal year, total company revenue was roughly flat to the prior year, in spite of having one less week of sales during the period and some foreign exchange headwinds. We were particularly pleased with our strong momentum in emerging markets, as we set first half revenue records in several countries and regions, including Latin America, the Middle East, India, Indonesia, the Philippines, and Turkey. These results, coupled with double-digit growth in services and strong levels of gross margin, drove a first half diluted EPS record of $3.71, up 9% from last year. Let me now turn to our cash position and capital return program. We ended the quarter with $162 billion in cash and marketable securities. We repaid $3.2 billion in maturing debt, and commercial paper was unchanged sequentially, leaving us with total debt of $105 billion. As a result, net cash was $58 billion at the end of the quarter. During the quarter, we returned over $27 billion to shareholders, including $3.7 billion in dividends and equivalents, and $23.5 billion through open market repurchases of 130 million Apple shares. Given the continued confidence we have in our business now and into the future, our board has authorized today an additional $110 billion for share repurchases, as we maintain our goal of getting to net cash neutral over time. We're also raising our dividend by 4% to 25 cents per share of common stock, and we continue to plan for annual increases in the dividend going forward, as we've done for the last 12 years. This cash dividend will be payable on May 16, 2024, to shareholders of record as of May 13, 2024. As we move ahead into the June quarter, I'd like to review our outlook, which includes the types of forward-looking information that Suhasini referred to at the beginning of the call. The color we are providing today assumes that the macroeconomic outlook doesn't worsen from what we are projecting today for the current quarter. We expect our June quarter total company revenue to grow low single digits year over year, in spite of a foreign exchange headwind of about 2.5 percentage points. We expect our services business to grow double digits at a rate similar to the growth we reported for the first half of the fiscal year. And we expect iPad revenue to grow double digits. We expect gross margin to be between 45.5% and 46.5%. We expect OpEx to be between $14.3 billion and $14.5 billion. We expect OI&E to be around $50 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 16%. With that, let's open the call to questions.
Thank you, Luca.
All right, here we
ask
go.
That you limit yourself to 2 questions. Operator, may we have the first question, please?
Let's see what they got. Here we go.
Certainly. We will go ahead and take our first question from Mike Ng with Goldman Sachs. Please go ahead.
Hey, good afternoon. Thank you very much for the question. I have 2. First, I'll ask about the June quarter guidance. The revenue outlook for low single digits growth. I was wondering if you could run through some of the product assumptions. iPhone, like what kind of gives you confidence around that? And then on the services momentum, what was better than expected in the quarter? And then I just have a quick follow-up.
Hey, Mike, it's Luca. On the outlook, what we said is we expect to grow low single digits in total for the company. We expect services to grow double digits at a rate that is similar to what we've done in the first half of our fiscal year. And we've also mentioned that iPad should grow double digits. This is the color that we're providing for the June quarter. In services, we've seen a very strong performance across the board. We've mentioned, we've had records in several categories, in several geographic segments. It's very broad-based. Our subscription business is going well. Transacting accounts and paid accounts are growing. Paid accounts are growing double digits. And also, we've seen a really strong performance both in developed and emerging markets. So very pleased with the way the services business is going.
Great. Thank you. And I wanted to ask about, as Apple leans more into AI and generative AI, should we expect any changes to the historical CapEx cadence that we've seen in the last few years of about $10 to $11 billion per year, or any changes to how we may have historically thought about the split between tooling, data center, and facilities? Thank you very much.
Yeah, we are all obviously very excited about the opportunity with Gen AI. We obviously are pushing very hard on innovation on every front, and we've been doing that for many, many years. Just during the last 5 years, we've spent more than $100 billion in research and development. As you know, on the CapEx front, we have a bit of a hybrid model where we make some of the investments ourselves. In other cases, we share them with our suppliers and partners. On the manufacturing side, we purchase some of the tools and manufacturing equipment. In some other cases, our suppliers make the investment. And we do something similar on the data center side. We have our own data center capacity, and then we use capacity from third parties. It's a model that has worked well for us historically, and we plan to continue along the same lines going forward.
Excellent. Thank you very much.
Awesome. Thank you, Mike. Operator, can we have the next question, please?
Our next question is from Wamsi Mohan with Bank of America. Please go ahead.
Yes, thank you so much. Tim, can you talk about the implications to Apple from the changes driven by EU DMA? You've had to open up third-party app stores. Clearly, this poses some security risks on the one hand, which can dilute the experience, but also lower payments from developers to Apple. What are you seeing developers choose in these early days and consumers choose in terms of these third-party app stores? And I have a follow-up.
It's really too early to answer the question. We just implemented in March, as you probably know, in the European Union, the alternate app stores and alternate billing, et cetera. So we're focused on complying while mitigating the impacts to user privacy and security that you mentioned. And so that's our focus.
Okay, thank you, Tim. And Luca, I was wondering if you could comment a bit on the product gross margins, the sequential step down. You noted mix and leverage. Any more color on the mix, if you could share, if customers are at all starting to mix down across product lines, or is this more a mix across product lines? Just trying to get some color on customer behavior given some of the broader inflationary pressures. Thank you so much.
On a sequential basis, yes, we were down. It's primarily the fact that we had a slightly different mix of products than the previous one. Obviously, leverage plays a big role as we move from the holiday quarter into a more typical quarter. So I would say primarily leverage and a different mix of products. I mean, we haven't seen anything different. In terms within the product categories, we haven't seen, anything particular.
Thank you so much.
Thanks, Wamsi. We'll take the next question, please.
Our next question is from Eric Woodring with Morgan Stanley. Please go ahead.
Great. Thanks so much for taking my questions. Maybe my first one, Tim, you've obviously mentioned your excitement around generative AI multiple times. I'm just curious how Apple is thinking about the different ways in which you can monetize this technology, because historically software upgrades haven't been a big factor in driving product cycles. And so could AI be potentially different? How could that impact replacement cycles? Is there any services angle you'd be thinking? Any early color that you can share on that? And then I have a follow-up, please. Thanks.
I don't want to get in front of our announcements, obviously. I would just say that we see generative AI as a very key opportunity across our products. And we believe that we have advantages that set us apart there. And we'll be talking more about it as we go through the weeks ahead.
Okay, very fair. Thank you. And then, Luca, maybe to just follow up on Wamsi's comments or question, there's a broad concern about the headwind that rising commodity costs have on your product gross margins. Wondering if you could just clarify for us, if we take a step back and look at all of the components and commodities that go into your products kind of collectively, are you seeing these costs rising? Are they falling? What tools do you have to try to help mitigate some rising costs, if at all, rising input costs, if at all? Thank you so much.
Yes, I mean, during the last quarter, commodity costs and in general component costs have behaved favorably to us. On the memory front, prices are starting to go up. They've gone up slightly during the March quarter. But in general, I think it's been, a period, not only this quarter, but the last several quarters where commodities have behaved well for us. Commodities go in cycles, and so there's obviously always that possibility. Keep in mind that we are starting from a very high level of gross margins. We reported 46.6%, which is something that we haven't seen in our company in decades. And so we're starting from a good point. As you know, we try to buy ahead when the cycles are favorable to us. And so we will try to mitigate if there are headwinds. But in general, we feel, particularly for this cycle, we are in good shape.
Thank you so much.
Great. Thank you, Eric. Operator, we'll take the next question, please.
We'll go to Coin once this is done, probably 10 minutes.
Our next question is from Ben Reitzes with Melius. Please go ahead.
Hey, thanks for the question. And hey, Tim, I was wondering if I could ask the China question again. Is there any more color from your visit there that gives you confidence that you've reached a bottom there and that it's turning? I know you've continued to be confident there in the long term. Just wondering if there was any color as to when you think that the tide turns there. Thanks a lot, and I have a follow-up.
Yeah, Ben, if you look at our results in Q2 for Greater China, we were down 8. That's an acceleration from the previous quarter in Q1. And the primary driver of the acceleration was iPhone. And if you then look at iPhone within mainland China, we grew on a reported basis. That's before any kind of normalization for the supply disruption that we mentioned earlier. And if you look at the top selling smartphones, the top 2 in urban China are iPhones. And while I was there, it was a great visit. And we opened a new store in Shanghai, and the reception was very warm and highly energetic. And so I left there having a fantastic trip and enjoyed being there. And so I maintain a great view of China in the long term. I don't know how each and every quarter goes and each and every week, but over the long haul, I have a very positive viewpoint.
Okay, hey, thanks, Tim. And then my follow-up, I want to ask this carefully though. There's a fear out there that you may lose some traffic acquisition revenue, and I was wondering if you thought AI from a big picture, and it doesn't have to be on a long-term basis. I mean, from a big picture, if AI is an opportunity for you to continue to monetize your mobile real estate, just how maybe investors can think about that from a big picture, just given that's been one of the concerns that's potentially been an overhang, of course, due to a lot of the news and the media around some of the legal cases. And I was wondering if there's just a big picture color you could give that makes us kind of think about it better and your ability to sort of continue to monetize that real estate. Thanks a lot.
I think AI, generative AI and AI, both are big opportunities for us across our products. And we'll talk more about it in the coming weeks, but I think there are numerous ways there that are great for us, and we think that we're well positioned.
Thanks, Tim.
Yep.
Thanks, Ben. Can we have the next question, please?
Our next question is from Krish Sankar with TD Cowen. Please go ahead.
Yeah, hi, thanks for taking my question. Again, sorry to beat the AI horse, but Tim, I know you don't want to reveal a lot, but I'm just kind of curious because last quarter you spoke about how you're getting traction in enterprise. Is the AI strategy going to be both consumer and enterprise, or is it going to be one after the other? Any color would be helpful, and then a follow-up for Luca.
Our focus on enterprise has been, through the quarter and the quarters that preceded it, on selling iPhones and iPads and Macs, and we recently added Vision Pro to that, and we're thrilled with what we see there in terms of interest from big companies buying some to explore ways they can use it. And so I see enormous opportunity in the enterprise. I wouldn't want to cabin that to AI only. I think there's a great opportunity for us around the world in enterprise.
Got it. Very helpful. And then for Luca, I'm kind of curious on, given the macro environment, on the hardware side, are you seeing a bias towards like standard iPhone versus the Pro model? The reason I'm asking the question is that there's a weaker consumer spending environment, yet your services business is still growing and has amazing growth margins. So I'm just trying to square the circle over there. Thank you.
I'm not sure I fully understand the question, but in general, what we are seeing on the product side, we continue to see a lot of interest at the top of the range of our products. And I think it's a combination of consumers wanting to purchase the best product that we offer in the different categories and our ability to make those purchases more affordable over time. We've introduced several financing solutions, from installment plans to trade-in programs, that reduce the affordability threshold, and therefore customers want to buy at the top of the range. That is very valuable for us in developed markets, but particularly in emerging markets where the affordability issues are more pronounced. But in general, over the last several years, and that is also reflected in our gross margins, over the last several years, we've seen this trend, which we think is pretty sustainable.
Got it. Thank you very much, Luca. Thanks, Tim.
Thank you, Krish. Operator, we'll have the next question, please.
Our next question is from Amit Daryanani with Evercore. Please go ahead.
Thanks for taking my question. I have two as well. I guess first off on capital allocation, you folks have about $58 billion of net cash right now. As you think about eventually getting to this net cash neutral target, do you think at some point Apple would be open to taking on leverage on the balance sheet and continuing the buyback program? Or is it more like once you get to this neutral position, it's going to be about returning free cash flow back to shareholders? I'm just wondering, how do you think about leverage on your balance sheet over time, and what sort of leverage do you think you'd be comfortable taking on?
Hey, Amit, it's Luca. I would say one step at a time. We have put out this target of getting to net cash neutral several years ago, and we're working very hard to get there. Our free cash flow generation has been very strong over the years, particularly the last few years. And so, as you've seen this year, we've increased the amount that we're allocating to the buyback. For the last couple of years, we were doing $90 billion. Now we're doing $110 billion. So let's get there first. It's going to take a while still. And then when we are there, we're going to reassess and see what is the optimal capital structure for the company at that point in time. Obviously, there's going to be a number of considerations that we will need to look at when we get there.
Fair enough. I figure it's worth trying anyway. If I go back to this China discussion a bit, and Tim, I think your comments around growth in iPhones and mainland China is really notable. Could you step back? I mean, these numbers are still declining, at least Greater China on a year-over-year basis in aggregate. Maybe just talk about what are you seeing from a macro basis in China, and then at least the annual decline or year-over-year decline that we're seeing. Do you think it's more macro-driven or more competitive-driven over there? That would be helpful.
Yeah, I can only tell you what we're seeing, and so I don't want to present myself as a economist. So I'll steer clear of that. From what we saw was an acceleration from Q1, and it was driven by iPhone. And iPhone in mainland China, before we adjust for this 5 billion impact that we talked about earlier, did grow. That means the other products didn't fare as well, and so we clearly have work there to do. I think it has been and is through last quarter the most competitive market in the world, and I wouldn't say anything other than that. I've said that before, and I believe that it was last quarter as well. And but if you step back from the 90-day cycle what I see is a lot of people moving into the middle class. We try to serve customers very well there and have a lot of happy customers, and you can kind of see that in the latest store opening over there. And so I continue to feel very optimistic.
Great, thank you.
Thanks, Amit. Operator, we'll take the next question, please.
You're welcome.
Our next question is from David Vogt with UBS. Please go ahead.
Great. Thanks, guys, for taking my question. I'm going to roll the two together so you guys have them both. So, Luca, obviously I'm trying to parse through the outlook for the June quarter. And just based on the quick math, it looks like, all things being equal, given what you said, the iPhone business is going to be down mid-single digits again in the June quarter. And if that's the case, and maybe this is for Tim, obviously, how are you thinking about the competitive landscape in the context of what you just said, maybe outside of China? And what changes sort of, the consumer demand or receptivity to new devices? Because we've been in this malaise for a while. Is it really this AI initiative that a lot of companies are pursuing? And do you think that changes sort of the demand drivers going forward? Or is it just really more of a timing issue in terms of the replacement cycle is a little bit long in the tooth, and we see a bit of an upgrade cycle at some point, maybe later this year into next year? Thanks.
I do see a key opportunity, as I'd mentioned before, with generative AI, with all of our devices, or the vast majority of our devices. And so I think that if you look out, that's not within the next quarter or so, and we don't guide at the product level, but I'm extremely optimistic. And so that's kind of how I view it. In terms of I'll let Luca comment on the outlook portion of it. I think if you step back on iPhone, though, and you make this adjustment from the previous year, our Q2 results would be flattish on iPhone. And so that's how we performed in Q2.
Yeah, David, on the outlook, I'll only repeat what we said before, and this is the color that we're providing for the quarter. We do expect to grow in total, low single digits. We do expect services to grow double digits, and we expect iPad to grow double digits. For the rest, I'll let you make assumptions, and then we will report 3 months from now.
Great. Thanks, guys. I'll get back on the queue.
Thanks, David. Operator, we'll take the next question, please.
Our next question is from Samik Chatterjee with JP Morgan. Please go ahead.
Hi, thanks for taking my question. And I have a couple as well. Maybe for the first one, your services growth accelerated from 11% growth to 14%. If you can sort of dig into the drivers of where or which parts of services did you really see that acceleration, and why it isn't a bit more sustainable as we think about the next quarter, because I believe you're guiding more to sort of averaging out the first half of the year for the next quarter. So just curious, what were the drivers and why not have it a bit more sustainably sort of improve as we go through the remainder of the year? I have a quick follow-up. Thank you.
So a number of things on services. First of all, the overall performance was very strong. As I said earlier, all-time records in both developed and emerging markets. So we see our services do well across the world. Records in many of our services categories. There are some categories that are growing very fast also because they are relatively smaller in the scheme of our services business, like cloud, video, payment services. Those all set all-time revenue records. So we feel very good about the progress that we're making in services. As we go forward, I'll just point out that if you look at our growth rates a year ago, they improved during the course of the fiscal year last year. So the comps for the services business become a bit more challenging as we go through the year. But in general, as I mentioned, we still expect to grow double digits in the June quarter at a rate that is very similar to what we've done in the first half.
Got it. Got it. And for my follow-up, if I can ask you more specifically about the India market, obviously you continue to make new records in terms of revenue in that market. How much of the momentum you're seeing would you associate with your sort of retail strategy in that market, retail expansion relative to maybe some of the supply change or the sort of manufacturing changes or strategy you've undergone or taken in that market itself? Any thoughts around that would be helpful.
Sure. We did grow strong double digit. And so we were very, very pleased with that. It was a new March quarter revenue record for us. As you know, I've said before, I see it as a incredibly exciting market, and it's a major focus for us. In terms of the operational side or supply chain side, we are producing there. From a pragmatic point of view, you need to produce there to be competitive. And so, yes, the two things are linked from that point of view. But we have both operational things going on, and we have go-to-market and initiatives going on. We just opened a couple of stores last year, as you know, and we see enormous opportunity there. We're continuing to expand our channels and also working on the developer ecosystem as well. And we've been very pleased that there's a rapidly growing base of developers there. And so we're working all of the entire ecosystem from developer to the market to operations, the whole thing. And I could not be more excited and enthusiastic about it.
Got it. Thank you. Thanks for the.
Yeah.
Thank you, Samik. Operator, we'll have the next question, please.
Our next question is from Aaron Rakers with Wells Fargo. Please go ahead.
Yeah, thanks for taking the questions, and I think I have to have two as well, like everybody else. I guess I'm going to go back to the China question. I guess at a high level, the simple question is, when we look at the data points that have been repeatedly reported throughout the course of this quarter, I'm curious, Tim, what are we missing? Like, where do you think people are missing, Apple's iPhone traction within the China market, just at a high level, given the data points that were reported throughout this course of the last quarter?
I can't address the data points. I can only address what our results are. And, we did accelerate last quarter, and the iPhone grew in mainland China. So that's what the results were. I can't bridge to numbers we didn't come up with.
Okay. And then as a quick follow-up, I know you guys haven't talked about this, quantified it in quite some time, but I'm curious of how we would characterize the channel inventory dynamics for iPhone.
Sure. For the March quarter, we decreased channel inventory during the quarter. We usually decrease channel inventory during the Q2 timeframe, so that's not unusual. And we're very comfortable with the overall channel inventory.
Thank you.
Yeah.
Thank you, Aaron. Operator, we'll take the next question, please.
Our next question is from Richard Kramer with Arete Research. Please go ahead.
Thanks very much. I'm not going to ask about China, but you regularly call out all the rapid growth in many other emerging markets. So is Apple approaching a point where all those other emerging markets in aggregate might cross over to become larger than your current 70 billion Greater China segments? And maybe investors could look at that for driving growth for the wider business. And then I have a follow-up for Luca. Thanks.
I think, Richard, you're asking a really interesting question. We were looking at something similar recently. Obviously, China is by far the largest emerging market that we have. But when we start looking at places like India, like Saudi, like Mexico, Turkey, of course, Brazil and Mexico, and Indonesia, the numbers are getting large. And we're very happy because these are markets where our market share is low, the populations are large and growing, and our products are really making a lot of progress with in those markets. The level of excitement for the brand is very high. Tim was in Southeast Asia recently, and the level of excitement is incredibly high. So it is very good for us, and certainly the numbers are getting larger all the time, and so the gap, as you compare it to the numbers in China, is reducing. And hopefully that trajectory continues for a long time.
Okay, and then as a follow-up, maybe for either of you, I mean, you're coming up on 4 years from what was an incredibly popular iPhone 12 cycle, and given you're struggling to reduce reach your net neutral cash position, and your margins are at sort of near highs. Do you see ways to deploy capital more to spur replacement demand in your installed base, either with greater device financing, more investment in marketing, more promotions? I mean, do you feel like you need to produce those sort of margins, or is it more important to spur growth with replacement? Thanks.
I think innovation spurs the upgrade cycle, and as one thing, of course, there's economic factors as well that play in there, and what kind of offerings there are from our carrier partners and so forth. And so there's a number of variables in there, but we work all of those. And we price our products for the value that we're delivering, and so that's how we look at it.
And if I can add to Tim's comments, Richard, one of the things that when you look over the long arc of time that maybe is not fully understood is that we've gone through a long period of very strong dollar. And what that means, given that our company sells more than 60% of our revenue is outside the United States, the demand for our products in those markets is stronger than the results that we report, just because of the translation of those local currencies into dollars, right? And so that is something to keep in mind as you look at our results, right? And so we are making all the investments that are needed. And Tim has talked about innovation. Obviously, we made a lot of progress with financing solutions, with trading programs, and so on. And we will continue to make all those investments.
Okay, super. Thanks, guys.
Thank you, Richard. Operator, can we take our last question, please?
Okay, last question.
Our next question is from Atif Malik with Citi. Please go ahead.
Hi, thank you for taking my questions. And I have two questions as well. First, for Tim, for enterprise specifically, what are some of the top 2 or 3 use cases on Vision Pro you're hearing most excitement? And then I have a follow-up for Luca.
The great thing is I'm hearing about so many of them. I wouldn't say that one has emerged as the top right now. The most impressive thing is that similar to the way people use a Mac, you use it for everything. People are using it for many different things in enterprise, and that varies from field service to training to healthcare related things like preparing a doctor for pre-op surgery, or advanced imaging. And so it's command control centers. And so it's an enormous number of different verticals. And our focus is growing that ecosystem and getting more apps and more enterprises engaged. And the event that we had recently, I can't overstate the enthusiasm in the room. It was extraordinary. And so we're off to a good start, I think, with enterprise.
Great. And then Luca, I believe you mentioned that for the March quarter, the commodity pricing environment was favorable. Can you talk about what you're assuming for commodity pricing on memory and Tetra for the June quarter and maybe for the full year?
Yes, we provide guidance just for the current quarter. So I'll tell you about the guidance. We're guiding to a very high level of gross margins, 45.5% to 46.5%. Within that guidance, we expect memory to be a slight headwind, and not a very large one, but a slight headwind. And the same applies for foreign exchange. Foreign exchange will have a negative impact sequentially of about 30 basis points.
Thank you.
Thank you, Atif. A replay of today's call
All right, we're
will
going
be
to
available
Coinbase
for 2 weeks on Apple Podcasts.
So Lightning was a big effort that we went on in partnership with Lightspark, by the way, to enable the Lightning Network on Coinbase. So this actually decreased the transaction times by over 99%. They essentially became instant on the Lightning Network versus roughly a 10-minute block confirmation time on the Bitcoin layer 1. And it also lowered fees down, about less than 0.1% of 1% from the previous fees. So this was a huge step toward getting to that sub 1 second, 1 cent. If we can do that across all the major chains and sort of make layer 2, like Lightning Network, a default within our apps and products, then I think the average transaction happening in crypto, or at least on our products, will get under that 1 second, 1 cent. And my excitement about that is that it allows us to really start to fulfill some of the long-term goals of crypto, which is how do we update the global financial system? How do we make it more fair and efficient and global, and really kind of reduce those payment fees, which are a shocking burden for a lot of consumers and businesses. I mean, it still boggles my mind that every time you swipe your credit card, the merchant is losing 2%. It's really just moving bits of data, kind of like sending a WhatsApp message, which is free. And so there's, why does that still exist as a 2% tax on every transaction in the economy? I think we've seen in other technologies out there that as you reduce friction, you get more and more activity. And so I think it could lead to economic growth and all kinds of things, just lower fees that people are paying. So anyway, we're excited about having launched the Lightning integration with Lightspark. They were a great partner, and hopefully we can do that across all the major chains that people are using.
Your next question comes from the line of Kyle Voigt with KBW. Your line is open.
Hi, thanks for taking my question. Maybe just going back to the institutional business, just on the trading side, the fee rate came in better than expected and has increased the last 2 quarters despite volumes growing significantly over that time. I guess what's been driving that? And then I'm also just wondering whether the strong market share on the ETF custody side and more broadly, the competitive positioning across the U.S. institutional crypto ecosystem has given you some pricing power in the institutional business more broadly, so not just on trading. And should we think about maybe pricing or fee capture to increase over the medium term in that institutional business because of that?
Thanks, Kyle. So I want to start and just remind you that there's 2 products underneath the hood of the institutional transaction fee revenue. The first is the exchange, where we have market makers trading directly on the exchange. And the second is our Coinbase Prime, which is the trading through the Prime brokerage platform. Fees on Coinbase Prime are higher than the fees on the exchange, largely due to the exchange just being very high volume, where our tiered pricing enables most of the clients participating in that to achieve very low fee levels. So when you see the fee go up, it's really driven by a mix shift. And we're seeing more growth on Coinbase Prime than we saw on the exchange. And as we grow Coinbase Prime, which I mentioned in my previous remarks, or Brian did, that we saw all-time highs in engagement on Coinbase Prime, both in trading volume as well as number of active clients. And that is what drove that fee for the last 2 quarters. It's just continued engagement with the Coinbase Prime suite of products.
Your next question comes from the line of Joseph Vafi with Canaccord Genuity. Your line is open.
Hey guys, nice results this afternoon. Maybe we could just drill down into some of the user-based metrics. Obviously, I'm sure you saw a lot more trading from existing users, but just wondering, how much perhaps new users contributed to the strong quarter, and then I'll have a quick follow-up.
We haven't broken it out, but we saw growth, yes, from existing users that were acquired prior to 2023 that re-engaged this quarter. We saw new users, and we also saw higher trading volume per user. So both of these, or all 3 of these metrics, really contributed to the growth, but we have not attributed and provided that level of detail.
Got it. And then just secondly, I mean, the ETFs got a ton of press attention in the quarter, and I think that perhaps, maybe underlying Bitcoin spot trading was kind of, I guess, not mentioned as much in the press. Just wondering if you've got a feel kind of where, if perhaps there was like a multiplier effect in the ETFs driving more Bitcoin trading. Obviously, it was other color you'd have there as kind of a guiding metric relative to ETF activity. Thank you.
I can take it if you want. I mean, yeah, look, I think the ETFs got a lot of attention, but what we're seeing is that when there's attention on crypto in general, I think it creates energy and interest across all kinds of products in the industry. So, we mentioned in the opening comments that this excitement around Bitcoin ETFs actually drove new customer adoption across our product suite, and we saw all-time highs in trading volume and active clients, for instance, in our institutional business. So, I think it's a rising tide that lifts all boats.
Your next question comes from the line of Bo Pei with U.S. Tiger Securities. Your line is open.
Hi, management. Thanks for taking my questions and congrats on the strong results. I have 2 questions, if I may. So, what is your view on the recent wealth notice received by Uniswap Lab? Do you think this will potentially impact the U.S. crypto industry and ultimately make crypto less accessible to U.S. users? And second question, also on regulatory front, it seems that the U.S. SEC wants to classify Ether as a security. If Ether is classified as a secured security in the U.S., how does that impact Coinbase trading service and staking business? Does that mean Coinbase had to stop offering trading for Ether and other cryptocurrencies classified as securities? Thank you.
This is Paul Grewal. I'm happy to address each of those questions. On the Uniswap Wells notice, I think it's noteworthy that Uniswap responded publicly, transparently, and made very clear their view that none of the claims that have been suggested or presented to them have any merit whatsoever. I do think that is reflective of an emerging trend, not just in this industry, but more generally, of companies taking their disagreements with the SEC publicly, always in a respectful tone, always in a constructive manner, but sharing with the wider public and certainly the wider market why they believe their products and services are consistent with federal securities laws and why they ultimately will prevail in the action that the SEC may bring. As for the ETH issue that has been presented in the consensus declaratory judgment action that was recently filed, what I think consensus has done in that particular case is, again, in a very transparent, productive, constructive manner, laid bare an issue that has been somewhat confused if you look at SEC statements and the positions of the commission over the last several years. The SEC has made very clear in the past that ETH is not a security. In fact, not only was that the position of senior officials at the SEC, the current chair of the SEC said that same exact thing prior to his appointment in the years that followed. So we're fully supportive of both Uniswap and Consensus in their view. The court process, of course, will have to play out, but we're confident that, as Brian has always emphasized, one way or the other through these court processes, we're going to get clarity for the market and certainly for Coinbase that unfortunately the SEC has not been willing to provide in its own right.
Your next question comes from the line of Mike Colonnese with HCW. Your line is open.
Hi, good afternoon, guys. Thank you for taking my questions and really great quarter here. So my question is around USDC. So the market cap has grown by over 8 billion since the start of the year. What do you consider the primary driver supporting this rebound, and how are you thinking about growth over the coming quarters? And then as a quick follow-up to that, I saw that you mentioned in your shareholder letter that you've seen a step change from legislators in recent months. So I know these things are difficult at time, but when can we reasonably expect to see stablecoin legislation passed in the U.S., and what would be the potential impacts for USDC? Thanks.
Why don't I take the first part, and then Paul, I'll hand it over to you for the second part. So we're really pleased to see the broader USDC growth. As we mentioned, we saw USDC growth on our own platform, where our own on-platform balance nearly doubled in the quarter, and we also saw growth in the overall ecosystem. I think there's been recognition that USDC is a highly trusted, transparent stablecoin by many market participants, and that has been leading to broader adoption, largely through efforts of ourselves and other market participants. So we'll continue to offer incentives. We'll continue to work with the global ecosystem to make it an adopted product. And Paul, maybe you can offer comments on.
Sure, on the legislation. Look, we're pleased and encouraged that Congress is paying attention to this important issue, and there are now a number of proposals for legislation that are working their way through the Congress. While certain proposals I think could and ultimately will be improved, the fact that we're seeing Congress engage, I think, is the important thing. Coinbase has been pushing for sensible legislation as to stablecoins for some time. We think it is an important complement of or to regulation that we've been pushing for before the SEC and elsewhere. So regardless of sort of when any such legislation might pass, it's always difficult to predict how quickly Congress can be able to engage and muster the necessary support in order to move this from mere legislation that's proposed to legislation that's enacted. We're encouraged by the fact that it does seem to be a priority, and we do expect to see legislation ultimately enacted that will enshrine standards for transparency, standards for reserves, and other important requirements around stablecoins that we think will continue to make the U.S. an attractive market.
Your next question comes from the line of John Todaro with Needham & Company. Your line is open.
Great. Thanks for taking my question. Congrats on the quarter. Good results here. I guess I have two here. One, on the 300 million outlook for the April transaction revenue, does that include the other transaction revenue base? And if so, how much is that? And then second, management's talked a lot about managing through the cycle here. No, you guys spend a lot of time thinking about that. So just kind of curious your thoughts on maybe where we are in the crypto cycle, or any kind of thoughts you put around that.
So I'll answer the first part. The answer is yes. 300 million is the April total transaction revenue, which includes both consumer, institutional, and other. And we haven't broken out the detail at this time to share with you. With regards to where we are in the cycle, it's one of our favorite questions, Brian. Do you want to take the first shot at that?
Yeah, sure. So, look, I'll leave the predictions to you all investors out there. We just mostly want to focus on building great products and tools and everything like that. But I can share just a few thoughts with you from past cycles and things that we've observed. So, the crypto market cap's up about 60% in Q1, and the volatility though is still below 2021 levels. So, a couple of things have happened. Obviously, that we had the ETFs in Bitcoin, there's possibility for other ETFs and like in Ethereum and things like that down the road in the future. We had the Bitcoin halving as well, which kind of reduces the amount of supply being introduced into the market every block really that's mined in Bitcoin. And so, if you have the same amount of inflows but half as much supply being generated every day, then you can imagine what that does. And so people anticipated that, and people speculate around those. But an interesting way to look at it is kind of in past cycles what happens post halvings. And historically, it's taken about 12 to 18 months for Bitcoin to peak after halvings. So who knows if that will happen again? But it's just an interesting data point. So those are all kind of the things that we think about. And I actually think layer 2 is probably the biggest piece that's coming down the pipe next. We talked about Base, getting those transaction fees under 1 second and 1 cent. It not only is it really interesting for global payments, but it's interesting for lots of different applications that can be built on blockchains. In past cycles, people started building things like DeFi and NFTs. These are things which you might periodically do a transaction, and you're okay paying kind of a higher fee for that, because how often are you going to do a trade or a purchase, and maybe the fee is $5, $10, $25 or whatever. For other types of applications, like if you want to make a decentralized social network and every upvote or like button is happening on chain, or you're in some sort of a game, or something that's more of a daily, hourly, by the minute use case, the costs and confirmation times have to come way down. And that's what we're seeing now with layer 2. So that's really hard to predict exactly what's going to happen, but I think it's pretty exciting.
We have one more question in the queue. It comes from the line of Pete Christensen with Citi. Your line is open.
Good evening. Thanks for the question, and congrats on the great results here. I'm curious. So press reports are indicating potentially that Loomis Gillibrand could hit the floor at some point next week. And part of that bill, as you likely probably know, is the dual banking system debate, and whether or not states can issue their own stable coins independently of the government, the federal government. I'm just curious how you see state-issued stable coins kind of playing in the market. Is that potentially an opportunity for Coinbase? I'm just curious if your thoughts around that dynamic. Thank you so much.
I'm happy to take that one. I think the point that you're raising around the role of state governments, and in particular state chartered institutions in supporting the crypto ecosystem, and in particular stablecoins, is an important one. Whether that ultimately comes to pass in any final legislation that's enacted remains to be seen. But we do think it's very important that states continue to have an important role in supporting stablecoins and supporting crypto more generally. We do think the dual system serves consumer and investor interests reasonably well, and we're hopeful and confident that in any legislation that's finally passed, that will continue to be recognized.
Great. Thank you, Paul.
All right. Well, that does it for today. Thank you all for your questions, and we look forward to talking to you next quarter.
This concludes today's call. You may now disconnect.
All right. That's it for Coinbase and Apple. Really interesting stuff we got from this earnings call. And I mean, I don't know. It was, what do you guys think how it was? Let me know it in the chat. We're going to be on for like another 10 minutes. Let me break down some of the stuff we got. Apple was the big one that mattered. And although the earnings call was a bit boring, the real thing that I think we all cared about was how much of this dividend increase is going to happen, and then how much of the buybacks are they going to do. And that dividend increase ended up not being a ton, but the buyback increase is just gigantic at 110 billion. So let's look at some of the equities right here. Coinbase, they had a great quarter. Unfortunately, I guess the 10% pop was too much during the day. They're down 4%. If Bitcoin goes up, then Coinbase will probably go up, relatively soon, but it all depends on if Bitcoin's going to go up. And I kind of thought Bitcoin would not determine that much about earnings in the short term, because I thought the numbers would be great. 1.2 billion of net income. I mean, that's incredible. Now it's about 750 million if you take away some of the other ways that they get their net income, right, with the asset increases. that they have to realize, but still almost $1 billion of net income off $1.6 billion in revenue is ridiculous. It is absolutely insane. Draftkings up 1.65%, Square up 7.75%. They're now going to be buying Bitcoin and putting it on their balance sheet like MicroStrategy as well. Apple still up 6.3%. Robinhood up 1% after hours, actually. I don't know why the hell Robinhood's up if Coinbase is down. Maybe it's because Coinbase is down just because Coinbase pumped 10% on the day, but Robinhood's up because Robinhood hasn't had earnings and because Coinbase had a really good quarter. And I'm going to go deeper into the quarter to kind of see some of the numbers and how that compares to Robinhood. That's why Robinhood's pumping, because Robinhood's quarter is going to be pretty good if Coinbase has had a good quarter. And Robinhood isn't up 700%, right? Like Coinbase. I mean, the threshold to get Coinbase to go higher after going up 7x is pretty high. Monster up 1.7%. Open Door up 5%. Open Door rebounding after hours, not bad. Texas Roadhouse basically flat after hours. Big Bear AI down 17%. And then you got Apple here at 6.38%. A couple of interesting facts in the context of what Apple did. So Warren Buffett has 905 million shares of Apple. He gets $217 million a quarter in dividends. Instead of getting $217 million a quarter in dividends, Apple will now pay Warren Buffett $226 million. So Warren Buffett will be receiving an increase of $36 million every single year because he owns 905 million shares of Apple. So interesting. I mean, for Warren Buffett and other institutional shareholders, it is a big deal to get the dividend increase, even if it's only 1 cent. So retail shareholders with a couple hundred shares maybe won't feel it as aggressively as Buffett. But the Toots will feel it, and that's why I think they're very excited about this. Now, with a $110 billion buyback program, I mean, that's really interesting right here. The question becomes, is it weak, right? So Apple up 7.45%, up about 6% right now. Is it a sign of weakness for them basically buying back the entire amount that the company received in market capitalization after hours? I don't think it's a sign of weakness, but I do think it's a sign that the company is slowing down. Data-driven investing, friend of the channel, had some good analysis here. Let's read what he said on Apple. Revenues negative 4% year over year, EPS negative 2% year over year. 110 billion in buybacks is 4% of the float. So net, the company is growing at 2% a year, which is less than the pace of inflation. And I mean, it's something you got to think about, right? It's a great company, but I still don't think it deserves even close to the premium it gets. I think with the pump after hours, Apple is now at a 32 PE. So it was at a 27 PE before we got into the earnings. Now it's at a 32 PE, a decent amount for Apple. One could argue it's a high premium to pay given that the growth is 2% a year. But they are buying back stock and they are paying a dividend. Now that $110 billion, I'm curious how aggressively they're going to deploy that. On the call itself, I don't know if you guys heard anything, but I didn't hear any vision for AI. Quite frankly, I heard a lot of analysts ask about China. They're really upset about China. Even one analyst at the end, he was just like, so I don't want to ask about China, but I'm asking about China, right? Like, so Luca, this guy Luca is a character. I love this guy Luca. He's very interesting. I think he's the CFO. He tried to kind of explain what's going on and some of the seasonal weakness that they're experiencing. China was the main concern, not AI. They didn't really give a lot of guidance on AI. They did say that they have some AI strategies in the future, but we don't know what that is. Now, maybe in their WWDC event and their iPad event that's coming up in a few weeks, they're going to be unveiling some of their core AI strategies, but we don't know that yet. And maybe this pump is a preview to Apple not only giving a dividend, not only doing share buybacks, but also having a legit AI strategy that the street is going to like. We don't know, right? And I think if Apple does lay out a vision for AI, that's going to be relatively exciting for the market because inflation is sticky right now. And if inflation is sticky, you need companies really harping on the backs of AI to be able to increase earnings. Apple, again, just one of those companies that's so mature, it's really hard for them to use AI as a tailwind. Either A, because they're not as innovative, one could make that argument, or B, they're just so big and they have so many products that are so saturated, it's hard to keep it going. The Vision Pro also was not mentioned. May 7th is the keynote. Yeah, so that's in 5 days. That's going to be the iPad keynote, most likely. The Vision Pro was barely mentioned. I don't remember, maybe I wasn't listening close enough, but I don't think any of the analysts asked about the Vision Pro. And I only remember Tim Cook talking about how they were so excited about the Vision Pro in his opening remarks, but there was no like unique questions that he had about the Vision Pro. So, I mean, I don't know. I think analysts didn't care about the Vision Pro. They cared about sales in China and they cared about AI, and both of those didn't give a lot of clarity. I think the reason it's up is because of the dividends and the buybacks. In the context of Coinbase, I think Coinbase absolutely crushed it. Coinbase, if Bitcoin was at 60 to 70,000, Coinbase would be $300 right now. This was an absolutely incredible earnings. This is the last thing we'll look at, and then I'll get you guys out of here. Here's Coinbase's earnings in a nutshell. 1.6 billion revenue, 1.2 billion net income, $1 billion of adjusted EBITDA, $7 billion of resources, 415,000 advocates that stand with crypto. That's one of the things they launched. 5.5 billion USDC, 30% increase in USDC market cap in Q1. First and largest international crypto exchange in Canada, 15 new perpetual future listings on Coinbase, and 80% coverage of the estimated total perpetual future volumes globally as of Q1. I mean, that's an incredible amount of market share that Coinbase has. 8x increase in developer activity on Base in Q1. Over 2x more transactions than ETH in the last 30 days. And Base has processed more transactions than any other L2 in the last 30 days, which is obviously very good for the amount of volume of movement of capital around Bitcoin on the platform itself. So their Base level 2 is doing very well. Net income's doing amazing. Total revenue is doing amazing. I mean, this is really, I mean, if you believe in the Coinbase vision, this is the future of money. This type of growth internationally. I mean, Coinbase and PayPal are the only two real universal fintechs, and PayPal still kind of just stuck in the past around credit cards and, you know, connecting to your bank and all that stuff. They're trying to do stuff in crypto, but it's not really that exciting. Coinbase, you can pay anybody, anytime, anywhere. If they have a Coinbase account, you have a Coinbase account, and you can use their level 2 resources as well to be able to do more transactions at higher speeds. And even Brian Armstrong was talking about their improvements in the Lightning Network to get payments to be fractions of a penny and faster than it was before. So, I mean, the innovation is on Coinbase's side. The only problem is we don't have to be rocket scientists to realize that if Coinbase, if Bitcoin is down as aggressively as it is, Bitcoin right here, 59,000, trying to get back to 60,000, but it was at 67,000 a couple weeks ago. If that's down, 15%, then Coinbase is going to have a hard time to be able to run. Vision Pro was asked by the last analyst. Okay, so the reason I didn't listen is because that call got boring. So, dude, that call was... And also, by the way, guys, for everyone who wanted me to switch the call, you guys don't understand. Like, I know there's like 10 people that were asking to switch. There were 1,400 people here that were not probably participating in the chat. You can't just switch mid-call for the majority of people. Like, it's just not a good look. People get annoyed if they clicked on something for Apple. That's why they're there. That's why they say last on the Meta call, I paused it for 10 seconds to make a comment because they were just saying like some stupid stuff like around there was no Q&A, right? The CFO was just talking about the same stuff we could read in the PowerPoint. And I got a DM that was so angry at me. He was like, Amit, I was trading the fucking futures on this fucking Meta stock and then you paused it and I got like, oh, my shit got messed up. And I'm like, first of all, why the fuck are you gambling with like what's going on? But second of all, I was like, yo, my bad, bro. My bad. So when it comes to these earnings calls, it's really hard to just switch in the middle, especially because people are using it as a resource. So that's why it was hard to switch from Coinbase. So why even give us the option? Okay, so that's a good question because that's a good question that Michael asked. Why did I say, hey, should we switch to Coinbase? I asked, in my defense, 15 minutes before the Apple call started, and I wanted to get a temperature check of what the room was, because if like 95% of the comments were like, we do not want Apple, we want Coinbase, I would have switched. So I was not playing with the chat's heart. I was being logical. I didn't ask during, I asked before. And it was still 50-50. Most people wanted Apple, or it was, 50-50 was Apple. So I was like, all right, this is a democracy in the chat. And there was not an overwhelming democratic vote to go to Coinbase. Robinhood, look at that, up 1% after hours. Robinhood's up after a good Coinbase earnings, and Coinbase isn't up. This is great. This is awesome. So, yeah, that's why it's very difficult to switch in between the calls, dude. I remember, dude, that guy DM'd me on Meta. He's like, dude, I love your channel. I'm a big fan. But when you turned off that Meta call for 10 seconds, I was just like, damn, bro. I didn't know it was that serious. I just wanted to say something because like the call was getting boring. So yeah, I try not to interrupt during these calls. Let's overthrow this dictator. It sucked too because I didn't want to stay in the call too. The call was fucking boring. They had this random Amit dude who's fucking hopefully not what I look like 50 years from now, and the dude's fucking talking about why they don't need to spend money on CapEx for AI, which I vehemently disagree with, asking these weird questions. And I wanted to go to Coinbase as well, but unfortunately, we had to stay. And I mean, look, the call was boring. The only reason the stock is up is because of the dividend and the buybacks. Nothing was said in the call that was interesting. Coinbase's call, we got at least 20 minutes of it at the end, and I thought the Q&A was good, but unfortunately, Bitcoin has not moved higher. So that is the problem. And that's what we had to see. Amit, we only need one Amit. That was your clue. Dude, there were so many Amits on that earnings call. There was like 4 different Amits. I was like, wow, is that a preview of me asking an earnings question one day to Tim Apple? I would love to ask him a earnings call, a question. Dude, if I had a question, okay, let's end on this. Thank you everybody for being here. Really appreciate it. If you're new to the channel, consider subscribing. We do a market open and market close every single day. And I can hopefully guarantee you will be the most exciting part of your day content-wise, because the people that are here in the chat, they can attest to the humor that comes from these shows. They can say it in the comments. I don't have to reaffirm it. They'll have my back here. And then hopefully the information is top-notch as well. If you had to ask Tim Apple a question, what would be the question? What would be the question? If you had to ask Tim Apple one question, what would be the question you have to ask? I already know the question I want. What would you have to say? It's not my birthday, dude. This is getting, dude, this, I know we have insiders as a chat, but this insider has gone on for like 2 weeks now. Look, Alan, you don't need to send a super chat, dude. I appreciate it. It's not my birthday. It's not my fucking birthday. It's not my, yo, what type of question is this? Michael says, do you like stairs? Why would you ask Tim Cook, do you like stairs? It's because you think Apple is taking the stairs up in terms of its stock price? Is that why? Like, why? That's the weirdest question. It's a very weird question. I don't know why you would ask that. Tits or ass? I would not ask that question to Tim Apple. I would not do that. Oh, here's a good one. Why the hell has he not put Bitcoin in Apple's balance sheet? I wouldn't say it like that. Honestly, that was my question, 94 Clips. That's the question I was thinking of. My question would be more intellectual, like, Mr. Tim Apple, do you even think a certain percentage of the allocation of hundreds of billions of dollars of cash you have on the balance sheet could be allocated potentially to a asset that is a bit more volatile, but could give more upside in the long term, like Bitcoin? That's how I would ask it. Or I would say, when are you going to do an acquisition? I would ask one of those two questions. What would you buy if you had to buy a company? Or if you are thinking of buying a company, and then would you ever buy Bitcoin? Sam Solid, thank you for the $2 super chat. Square, Melly, Apple, let's go, Mid. Happy B-Day. Again, I appreciate it. It's not my B-Day, but yes, Square, Melly, and Apple had a great earnings. When are you stepping down to let another innovator lead the company? Okay, I wouldn't ask that. That's disrespectful. But number two, look, I know everyone hates Apple because they think they don't innovate. I have the opposite perspective here. So I feel like I'm on an island in two different places. Number one, I'm on an island where I say Vision Pro is a dud. Now, I know a lot of people in the chat agree with that, but I say that on Twitter and I get all these comments like Vision Pro is just starting. I'm like, okay, whatever. So that's one contrarian take I have. The second contrarian take I have is I don't blame Tim Cook for the lack of innovation, because I think it is very difficult to keep building products and services that we will use. When we're all using this thing, 2 billion of us every single day, and we all have the AirPods, we all have the iPads that are never charged, like, and we all have the MacBooks. How many more products and services can you build to innovate? Vision Pro, by the way, very innovative. It's not a product category that I think has a lot of potential, but it is innovative. Spatial computing is innovative. It's just very hard. And unfortunately, he was after Steve Jobs. Everyone thinks, oh, if Steve Jobs was still alive, he would just keep innovating. I don't know, dude. It's not that easy. Like, it's not that easy to keep pushing the boundary. So I don't blame Tim Cook on the lack of innovation. But nonetheless, it is something you have to think about when it comes to Apple's multiple, and is it justified if the innovation isn't really there? ET FaceTime says, happy birthday, Amit. Can't believe you're almost 40. First of all, I'm going to be 27 in October. Okay, we're not pushing 40 yet, but we are pushing 30. We are indeed pushing 30. So we will get there. Okay, that's it for me. Thank you, everybody, for being here. Deeply, deeply appreciate it. It means the world to me. Tomorrow we'll be live on the Market Open. Oh, wow. Tomorrow's Friday, dude. May 3rd. We're literally at the end of the week. 8:45 tomorrow. We'll cover everything that happened with Apple and a bunch of other companies today and keep going from there. And then tonight we'll be live on Finance Junkies. Also, I will be reacting to Karp's interview. If you were part of the Market Open, you already saw me react to Karp's latest interview. I'll be posting that as a separate video in like 30 minutes. So if you didn't get to see my reaction to Alex Karp, CEO of Palantir's latest interview, then you'll get to see that in 30 minutes. Do I really look 40, dude? I don't look 40. Y'all are bugging. 40. Now, when I had the beard, if you're an OG member of the channel, your boy looked 40. I'm not going to lie. But hopefully I don't look like I'm 40 then. But anyway, I'm going to be 40 one day. So regardless, we'll get to 30 and then 40 and then 50. And hopefully we keep being alive. And the one thing that's going to stay constant through the decade of the 30s that I have, through the decade of the 40s that I have, through the 50s, 60s, 70s, 80s, 90s, what's going to be the one thing that's going to be constant if I'm alive till then? I'm going to be doing the motherfucking market close. That's it for me. Thank you, everybody. I'll see you guys tomorrow morning. Bye, everyone. Have a good one. Good night. Thank you for joining. Bye.